It is Ryan Seacrest here. Everybody needs some variety in life. That's what I love about Chumba Casino. They know how to keep things fresh and exciting. All their games are free to play, like spin slots, bingo, and solitaire. You can claim free daily login bonuses, too. And they release new games every week. So spice things up with ChumbaCasino.com now for your chance to redeem some serious prizes. Sponsored by Chumba Casino. No purchase necessary. VGW Group. Void where prohibited by law. 18 plus terms and conditions apply.
Hey, good evening, everyone, and welcome to another Money Space with me, Kalu Aja. For those who don't know, we're here every 7:30 West PM West African time. Of course, we're talking money, the economy, and personal finance. The aim of the show on X, which you call the Money Space Show, is to learn together about money. We want to be better investors, right? We want to understand how money works for us. And the only way we can do that is to understand the interaction with money, the economy, even politics, What does it all mean? That's the whole idea. So when we come to the space, we're all learning together. We have lots of great guests that have come, and they come and talk to us about topics. And then, of course, we can learn. The shows are recorded, and you go back and you play it, and you learn. That's the whole idea. Everyone really, it's a great space to be on Sunday because it prepares you for the next week. You learn something you might have known about, and you can take it for the next week. All right, guys. So just want to review for this is going to be our last space, right, in 2024, and it's been a fantastic year for us, right? We all made it. That's the first thing. We all made it. We're at the end of December, a few weeks to the new year. The new year is a financial event, which means in the new year, you get to reset your entire finances. You get to get new streams of income. Even if it's the same thing, you're going to start from January 1st. And whatever plans you have psychologically, you are starting from January. It sort of gives you, a boost. It's like a New Year resolution. You can start whatever you want to do January 1st. I want to keep a budget. I want to track from January. And it does allow you to power through that entire year. So last night or yesterday, I was looking at my podcast because what we do when we have the spaces on Twitter, we save them on the podcast, so it's there forever. And I know the podcast is the way I see it. I think I've shared the links also on my timeline. You can get that link there. We started about in November 2020 recording the podcast. Before then, we were recording the podcast from November the 16th, 2020. We started to record the podcast. I counted about 245 episodes that we've recorded, 60 in 2024 alone. That's a lot. That's more than the normal 4 a week because we're here every Sunday, but we've done more than that. So that's fantastic. And we've only done that because you guys have tuned in here week in, week out to listen. And I do appreciate it. I was looking at the top podcast that we've done, the very, very top episodes that we've done. The number one episode was how to buy a house in 36 months as an immigrant. That was a space that we did in January of 2022. I think we did it again. And essentially, I laid out how, as an immigrant, you travel to the West, maybe in the UK, the US, Canada, the same principles work. How you can get a house in 36 months. It's possible. I 24 is stretching it, but it's definitely possible in 36. It's not like a motivational speech. I give you the step by step. How if you leave Nigeria today and you go to the West, Canada, the US, America, it's possible to buy a house in 36 months. And why is it important? Because buying a house is a pathway to middle class in America and in the West. When you own a home, you own equity. And that puts you into that the way the economy there is structured. When you own a home, you have equity. You can then pass on generational wealth. The difference between the demographics in America, if you look at the whites, the Hispanics, and the blacks, is home ownership. Because home ownership allows you to write a check on the appreciation of your home. That allows you to send your kids to university. That gives you a low interest loan for a business. That gives you an emergency fund. Most blacks do not have a home. So they do not have that place they can run to get a low interest credit if they need credit. That's the main difference. There are other things, but the inability to get a mortgage. That's why you had Under Jim Crow laws, you had redlining because the guys that were quote unquote racist understood that if you keep people at home, you're putting them on the path to economic self-sufficiency. So not having a home, not having been on that pathway, is a big drag on you. Can you get rich without a home? Yes. But the pathway is you come in, you get a mortgage, or you get educated, you get a job, you get a mortgage, you're on the pathway. The equity is yours. Everything is there is yours. So getting a home is very, very important for you as an immigrant because you have to stay somewhere, right? It's either you pay rent or you pay a mortgage. Rather pay a mortgage and own the home. You're still going to pay anyways, right? And a mortgage is going to be cheaper for you than a home. And that was our biggest episode. Then, of course, we had where to invest $1 million. We had the EBO telling us how to invest in it. Not really how to invest in it, but how to do asset allocation. If you have money, how can you invest it? Where do you put it into? If you are in Nigeria, in the UK, give us Nigeria, give us UK. And of course, we had the guys from Clever. Clever was an app that allows you in Nigeria to open a bank account abroad, right? So they were also here. It was very, very nice. People listen to them. And you can see the theme of this three highest grossing topics that were downloads: how to buy a house, how to invest, how to open a bank account. So people want to do things. People want simple financial topics that they can listen to and can understand and they can implement. So we're glad to be there, right? Over the last month, we've done 3 episodes. The first episode was Financial Health Check, where we talked about your income, your expenses, and of course your budgets. Then the next week, we then did assets and liabilities and asset allocation. We said, okay, we now know you want to do a budget, but if you have a budget, where do you invest, right? That's what we then talked about, where you can invest, how to build an asset allocation if you're younger, and all that. So this week, we sort of want to close it out with a checklist for you for 2024. And again, guys, it's the last podcast of the year. So feel free to request to speak or leave a comment. If you have a question that is even outside the topic, we'll be glad to take them. So don't restrict yourself to just what's on the topic. If you want to speak, request to speak, I'll add you on. You can ask a question. It doesn't have to be what we're talking about. But what I really just want to get across before I hand over the mic to you folks is just this concept of having a checklist. There are many non-financial things that are still due in 2024 that you want to get done for 2025. And I've shared, if you go to my Twitter page, I've just shared a checklist from my book, Let's Talk About Your Money. So page 254, the appendix talks about your checklist. And if you don't have that checklist, it's right there on the Twitter page. Just go there and it's listed from number 1 all the way to number 17. And these are things that you want to do. At least take them off on your checklist that you've done that for 2024. If you haven't done them, it's very, very important you get them set for 2025. Number 1, track all your expenses. Write it down. I prefer this for 3 months. This is what we talked about 2 weeks ago, right? Tracking your expenses so that you can then create that budget. So a budget is you track your expenses, you categorize, you allocate dollar or naira to your categorizations. That's a budget. That's number 1. So we say track your expenses. Number 2, track your income, especially passive income. And of course, you remember we said passive income because we said passive income is what makes you retire. You are only rich when you have passive income, not when you have active income. What I mean is this: if you're a footballer and you get paid $1 million a week, you are not rich unless you convert that $1 million salary into passive income. Which means you take that salary, you buy a house, the house pays you your rent. The rent is your real income, not the salary they're paying you. Same with if you work in the bank. Your active income, that income you make from going to the bank, is not your wealth. It's when you convert that active income to passive income, which means income you make when you're not there, that's wealth. Number 2, track all your income, especially passive income. Number 3, create a schedule of your assets and liabilities to calculate your net worth. So income is different from net worth. Like I said, income makes you buy an asset. The asset goes to your balance sheet. It's the difference between your assets and your liabilities that is your net worth. So if you earn money, you're not rich. It's only when you convert that money to an asset, that stream of income, your salary, whatever it is, to an asset that pays you income, that's when your net worth can go up, right? We said also number 4, track your discretionary and your non-discretionary expenses. The trick is this: you want your passive income as you are working to cover your non-discretionary expenses, because that's when you can retire. Retire is an event, it's not an age. Retirement means when your passive income can cover your non-discretionary income. We have it there. Number 6, create a fund to cover your 3 to 6 months of your non-discretionary expenses. This is your emergency fund. So before you start to invest, create your emergency fund first. Why? You don't want to invest and have to sell your assets to pay an expense if your car engine goes knock or you get sick. So you do the emergency fund first. Then of course you do your budget, right? You review your balance sheet. Why? This number 8. Why do you review your balance sheet? You want to identify high interest debt and have targets to pay them off. So when you track your income, you track your expenses, you do your balance sheet, you want to look at your balance sheet and say, what are the high interest debt there? I want to pay them off in 2025. That becomes the target that you're going to extract from your balance sheet, right? Remember, we haven't talked about investing. We've said number 1, emergency fund. Number 2, you want to pay off your high interest debt. We haven't talked about investment. Number 3, you want to buy life insurance if you have dependents. You're going to do all this before you invest. Number 1, right? You want to have an emergency fund. Number 2, you want to pay off high interest debt. High interest debt, not all debt. High interest debt that is very expensive, very short term, you want to pay those off, right? Number 3, you want to buy life insurance, which means if you're a family guy, you have a family, you have dependents, you want to buy insurance. There is nothing like life insurance. You can't insure your life. What you are insuring is the loss of revenue should you no longer be there. So if you're no longer there, who pays for the school fees? Who pays for the mortgage? Who pays for the day-to-day living? That's what you are buying. So if you earn $1 million, you can say, I want to buy 5 times my annual income. I want to buy life insurance for 5 years, which means that whatever happens to you, your family gets a salary for 5 years. So you buy life insurance if you have dependents. If you don't have dependents, you don't need it. So you don't need life insurance if you don't have dependents, right? Number 4, what else you do? You have to sign up for your employee pension plan. So if you have an RS in Nigeria, make sure you are contributing. Don't say the economy is bad. No, you want to keep on compounding in your retirement savings account. If you're in the US, very important, you want to make sure that when you do your pension scheme, when you go for a company, they will tell you, if you pay $1, we will match you. You want to find out from your HR what that match is, and you want to make sure you are contributing the minimum to that match. So whatever, if your company is matching 5%, you want to make sure you are contributing at least 5%. You don't have to do 6, but make sure you are doing the math, because it's more on the table. The company is saying, if you put $1, we're going to give you 50 cents. Make sure you do that dollar to get the corresponding match. We haven't talked about investing. Number 1, emergency fund. Number 2, pay off your debt. Number 3, buy life insurance. Number 4, we are saying you should do your retirement plan. It's there on the checklist, guys, on Twitter page. Do your retirement plan. After you have done all this, that's the only time you can then go in and say you want to invest. We are saying open up an investment account. If you don't know what to do, try and do an index fund. Index fund means you are buying top down. You are buying the whole exchange, right? You buy that, then you understand the market, then you take it from there, right? So you buy an index fund, then you can then go to a sector fund, then you can then go to the individual fund, right? Because you don't know what you're doing, right? And you don't want to just buy something that you think is going to go up and it falls. So you want to diversify your risks across the board, right? Top down. So you're going to say, I want to buy Nigeria, I want to buy US, and then from the US, I want to buy tech sector, or I want to buy the banking sector. Then you work your way down, right? And then we say number 13, your automatic dollar cost average, which means you just keep on being consistent. Investing is about being consistent. You don't invest today and stop. Even if it's 10 naira, be consistent, right? And it's only when you have done all this, you can talk about having a mortgage, right? Or setting up a charity, or getting a credit card to build your credit. So it's all detailed out there in the appendix sheet. Sorry I've taken so long, guys. Now the floor is always open. If you guys requested us to speak, I see they've dropped off. So request to speak now if you want. But this is just what I want to talk to you guys about. Don't forget to sort out your estate account, right? Your estate part of your financial plan. Do you have a next of kin? Is it listed in your organization? Do you have it there? Do you have a bank account? Do you have a beneficiary on that bank account? Very, very important. All those not things that you might take for granted or not put a lot of emphasis on is actually where you want to put some, some housekeeping on. There's no point not having a lot of money and not having a schedule of where your assets are. You want to have a schedule of where all your assets are so you can know where they are, and then you can then sort of like manage them, and if you want, in that case, you can also distribute them. So very, very important, guys, the points I'm making. So let me just go straight to DM. Sorry about that. So first real question is here. Please go over the investment in the paying off my debt. I do this. Yes. So he's just asking. This is from Abubakar. He's asking why should you pay off your debt before you invest? Well, because look at it this way. If you are paying a debtor 15% and you invest and you make 15%, it's not the same thing. When you pay off that debt, you're making 100% return. If you are owing someone and you pay the person off, guy, you made 100% return. Why? Because you now have all that money available to invest somewhere else. So if you are investing in the property that sometimes giving you 10% and you are owing someone 10%, it doesn't make any sense. The best investment you can take is to take that 10% and pay off the debt so you don't have any debt. It helps your net worth. It makes you richer because you're reducing the debt forever and you are releasing cash flow back to you. So you want to do that first because that gives you a higher return than actually going to invest money. Does that make sense, Abubakar? You want to invest first of all in what gives you a higher rate of return, and paying down your debt gives you a higher rate of return. Yes. Also, let us question here about emergency fund. Your emergency fund is 3 to 6 months of your non-discretionary expenses, which means when you list out your expenses, you want to ask yourself, which expense is the most important expense? Which expense do I need to do? Like, I have to eat, I have to buy gas. You list those expenses out. When you list them out, you want to save at least 3 to 6 months of those expenses. Not all your expenses, of the emergency fund expenses, right? And it's whatever you list as emergency fund, that's an emergency fund. Now, what will happen is this. If you don't have to have the whole 3 months immediately, but you want to have at least a fund where you can start to contribute to that 3 months. And what you also want to do is you want to keep that fund in cash or near cash assets. So you don't want to keep your emergency fund in stocks or property. It has to be in cash or non-cash. Yes, unfortunately, you have to ignore inflation. Just keep it in cash because that's why it's an emergency. It doesn't have to be in a bank, but it's got to be in cash or near cash. That's the point. It's got to be cash or near cash. So great question there on emergency fund. Are the podcast available? Yes. If you go to the DM, if you go to if you go to the TL, on Twitter, you see the podcasts. It's called Let's Talk About Your Money. It's right there, so you can get all the episodes. We're also on Spreaker. The podcast is recorded on Spreaker. You can find the podcast on Apple, on Google, on anywhere literally you have podcasts. You can find our podcast. Lots of great topics there. So yes, it's on my DM, it's on Twitter, it's also on Spotify, Apple Podcast, and all that. So anywhere you have podcasts, yes, you can find the podcast. Not having a lot of guys requesting to speak. Are you guys okay? Perfect. Okay, yeah, I hear you. Yeah, so you can request to speak, guys. I'm just going through DMs, and most of them are repeating themselves, but I prefer to do the live. So if you want to speak, just hit me up on that guy. Let me read this one. Last week we talked about. Let me see. Last week we talked about investing in shares. Also, okay, yeah. So last week we talked about investing in shares, and you were talking about ETFs. So okay, I hear you. So last week we talked about ETFs. That's exchange traded funds. So exchange traded funds are not different from the index. Exchange traded funds can invest in the index. So for instance, if you want to invest in Nigeria or the US, you can buy an ETF that invests in the index of those shares. That's what I mean by that. Sydney, how are you doing? You're our first guest today. Sydney Casey, what's on your mind? Sydney, hit me up.
Hello, everyone. Happy Sunday. Good afternoon. Um, okay, so I've been trying to take my personal investments more serious. I have some educational loans, so that's one thing I'm trying to clear out at least by the middle of 2025. I'm planning to get that all sorted out. So I have a question, but it's based on after sorting out your high interest loans and you're ready to start investing, and let me just say you have a little bit of knowledge on the global financial markets. You have a full-time job. I've heard from different financial experts that you cannot you cannot trade the financial markets as good as a pro. What is your take on someone with a full time job, like a professional and another profession, day trading, on the side? What's your take on that?
Yeah, so look at it this way. Let me give you a stat that will surprise you, right? If you pull up every year, they pull up a stat, and not more than almost 80% of firms do not beat the market. What that means is that if you look at all those guys that trade on the stock market, stock brokers that take your money and trade, almost 80% of them do not do better than the index. So if you simply buy the index means that it's an index that tracks all the funds in an exchange. For instance, you see S&P 500, that tracks 500 stocks in the US market. You see NGX, that's Nigerian All Share Index Nigeria. That is all the shares in Nigeria. That index has a return. In Nigeria, the index is like 36%. So what they're saying is that if you give your money to a stockbroker, it might not even beat that 36%. So what's the point? If you're not going to be trading actually and you don't know what to do, it might make more sense for you to simply buy the index. Nigeria has an all-share index 30. They have Pencom, what's it called? Pencom index. They have a bank index. These are like indexes that are tracking particular stocks. So if you just buy what that index is buying and just forget about the security for the entire year, for the entire month, you make as much as the index. So I would say if you don't know what you're doing, try to do index funds. They are cheaper to buy, they are more diversified, and you are putting your quote-unquote faith on the entire market. You are buying the market. I don't like day trading because you are trying to trade against people that are more experienced than you. When you are day trading, you're doing what's called scalping. You are buying one to sell at 1.1 and make one kobo. You only make a lot of money with day trading if you have a lot of capital. Because when you make 10 kobo spread, but you bought 1 million shares, it makes sense. If you have 1 million naira, what are you day trading? If you convert 1 million naira to dollars, it's like $500. You can't day trade with that, it's too small. If you make 100% on $500, what is that? That's 1,000. You get the point I'm making. But if I trade $1 billion and I make 0.0001 of that, see what I mean? So I would prefer that if based on your objectives, based on your age, if you're not sure what to do, just go buy an index fund. If you're in the US, if you're in Nigeria, go to your broker. Listen, buy me the NGX index, or buy me the banking index, or buy me. So it's cheaper for you. Then you learn more about the market before you then go into individual stocks. Does that make sense to you?
Yes.
Yeah, so that's what I would suggest for you, right? Try to do the index side first before you go into the individual stocks. I don't think you should day trade. Takes your time, it takes capital, and you can lose everything. Yeah? Okay. Perfect.
Thank you very much.
Great. Let me get Mofe. I don't pronounce that name wrong. It's Finfulu. Sorry about that. Finfulu, did I get it right? Mofiyin Folua. Mofiyin Folua. Mo, are you there?
Yes, hi.
Mo, how you doing?
Yeah, fine. You partially got the
I apologize.
but
Yeah.
it's fine.
Okay, great.
It's fine. Yeah, so I'm just joining your space. So far, I would say very nice information.
Thank you.
But I did not get the part you mentioned or the part you mentioned about the podcast one can listen to.
Okay.
I have a lot of liquid cash. When I say liquid cash, I'm saying in both Naira and USD. And I'm looking for places to invest. So I'm not just stuck at having my money just staying idle and all that. But I need to understand. I don't just want to invest for investment's sake. I don't just, for example, want to say, okay, put your money here. I would like to understand how it works, how to build my wealth exponentially, basically.
Okay, let's use you.
Right places.
Let's use you as an example, right? So again, just understand, I'm not giving you financial advice. I'm trying to just point you in the right direction, right? So everything I'm doing here is educational. I'm not giving you financial advice. I'm not your financial advisor, right? But the very, very first thing you should ask yourself is, what is my plan? Why am I investing? That's a very, very key question. Because once you answer that question, it determines where you should invest. So if you say, why am I investing? Am I investing for retirement? That's a statement that I convert to mean long term. If you say, I'm investing because I have this money, but I'll need it in 2 years for my project, in my head, in my financial head, I hear 2-3 years. So why you are investing is very, very key to me. So I'm not sure if you can share it or if I should just talk and then you can take it down and then operate on your. How do you want us to do this conversation? Do you want to share, or I should just go ahead and just assume and I continue? What do you want to do?
Well, so I'm looking at medium and long term. Yeah.
What is medium term for you? 5 years?
Yeah, medium is 2-3 years.
2-3 years, okay.
Yes. Then I'm also looking long term. I'm looking for whatever I have right now to multiply at the end of the day.
To multiply.
And all of that.
Okay, so you want to risk your principal. You want to do principal appreciation.
I would not say my risk appetite is that high.
No, I'm not going to risk. Well, I'm going to risk. We're just talking about your objectives now. So you are saying you want to invest for 2-3 years. You want to risk the principal. You want to multiply that principal, right?
Yes,
right?
Yes.
Do you need liquidity during this time?
Not so much.
Not so much. So I prefer to wait for 2-3 years if that investment can grow, but you don't need liquidity back. Okay, let's talk about your risk profile. If tomorrow the market falls by 100%, are you okay with leaving it there because you have a 3-year ultimatum timeline, or do you want to take everything out? What's your take on this?
I'm taking it out. I'm so risk adverse.
Okay, so you see the problem. You see the problem. When you are risk adverse, you can't risk your principal.
Okay.
You see, so if I hear 2-3 years, I'm hearing short term. I'm not hearing stock markets at all. The stock markets are for investors that want to put their money minimum 4, 5, and longer. Why? Because it compounds. If you invest in, say, Tesla, look at Tesla. Before the elections, Tesla was what, 175 for some very cheap. After the elections, it's about $400. So in this short space, it's gone up, it's gone down. So for someone like you that wants your principal intact, imagine if you had bought maybe Tesla or the opposite of Tesla. Imagine you had bought Moderna. Moderna does COVID injections. They were up, now they are down. In 2 years' time, you want your money back, it's no longer available because it's gone down. So stocks are not for you for a 2-year investor. Also, you said you want to grow your capital, but you don't want to take a lot of risk. So those are two goals that do not merge. You understand? That's why I asked your objective. So your main objective, based on what I'm hearing you say, is more or less a short-term investment, right? Fixed income, where your capital is preserved, but to give you a bigger, or you say, a more wider avenue to make larger return on your principal. So it's no longer grow your principal, it's make a return on your principal. Right? Okay. So now, do you want to invest in Nigeria or do you want to invest abroad?
When you say invest in Nigeria, you mean invest in Naira?
In Naira, correct.
No, that is not an option for me. Okay. I would rather prefer the USD investment.
Okay, so if you're going to do USD investment and you want a high rate of return, what you're looking for are going to be certificates of deposits. You're looking for those guys. Now, if you do a seed in America, you are going to be getting anywhere from 4%, from about 3% to about 5%. 3 to about 5%. If you talk to your bank and your broker, 3 to 5%. If you want more, you can tell your broker you don't want FDIC protection, which means it's not guaranteed, but it exposes you get more. Now, can you live with a non-FDIC? You can say, well, this bank will not crash. It's in America. There's an implicit guarantee. You can say that, right? But you don't have the FDIC. FDIC is 250,000 and below. So if you tell a broker, listen, you can give me a CD without FDIC, there are many you can get that will pay you 5%. For now, remember that this rate today is artificial because the high inflation in America is going to come down. So for someone like you, that's what I'll ask you to look at. I won't actually look at bonds because you're looking at a short term, 2-3 years. That's a CD. I would go to a CD or a money market. For your case, it's going to be a money market because it's more longer term and you can withdraw it. I'll tell my broker, can you give me the FDIC option? Give me the non-FDIC option. When he gives me both of them, I'll look at it based on my risk profile. I can decide to do. I can spread an investment into 3 or 4 companies, the same amount of spread across, or do a ladder. Ladder means you do 3 months, 3 months, so 3 months, 6 months, 9 months maturity. So every 3 months is maturing. You understand? You take that money you have, you divide into 3, 6, 9. So every 3 months it's maturing. So if it matures, you like it, you reinvest for under 3 months. If you don't like it, you take it out. Things like that. But that's how we would invest for you, because you are being specific and all that. If you had come to me and you said, give me another objective, another risk profile, then I'll give you another asset class. So there's no better or best investment. There's only an investment that meets your objective, which is what I've just sort of tried to do today.
Okay, thank you very much. Just 2 more questions, if you can answer.
Yeah,
okay, so first question would be, are these options open to non-citizens of the US? And secondly, because you mentioned I need to speak to a broker, I don't have one at the moment. Is this something that I can maybe look to find or something? And secondly, I just wanted to bring you back to a part of the question I asked about the resources I can use to build up my knowledge. Because like I said, I just don't want to invest for investment's sake. I want to understand why I'm investing, or the things behind, or the instruments I need that are available to me for investing. So,
I got you.
That's what's it.
Those are 2 fantastic questions. Let's do your first question, non-US residents. Yes, because you are in the West, right? If you talk to your broker and you say you want access to a US CD, I think they can get it for you. I know you need a US social to buy US depository investment, but I think your broker will find a way to buy it for you because they have funds, money market funds that do that, right? And especially if you're in the UK or so, they can get a way for you to get that exposure. Yeah, so talk to them and say, I want to get exposure to US CDs. There are also more CDs that pay you more. If you can take the risk, Turkish bonds are paying like 30%. So you can go across the world. Just Google it. Just say CD yields across the world. They will give you lots of yields. Nigeria is paying in dollar terms, Nigeria, nearly 9% for 30 years. So if you bought a euro bond issued by Nigeria, you're going to make about 8.5. That's the coupon. If you look at the yield, it's more than 8. So if you buy that euro bond issued by Nigeria, you get more than that from the secondary market, right? And that's what I was asking for, do Nigeria, because you can do Nigeria dollar also if you invest in Nigeria. But if you talk to your broker, I'm sure they can give you a way, because you're already in the West. It's harder for a Nigerian to invest, but you're already there. They've done more KYC on you, so it's easier for them to basically get that for you. So talk to them. They can, on how you can grow yourself. My brother, is the same way. Are you a football lover?
Yes.
It's the same way you learned what offside rule was. You watch football, your uncle said offside. You think, what are they talking about? Then you watch it again, offside. Then you ask your friend, then you know, offside means the same way you learn offside is the same way you're going to learn about investing. You've got to go study it, hear people talk. And I always recommend people to go to YouTube. So YouTube, just put YouTube, how to learn about investment. You will see tons of resources with videos that will break it down for you, explain to you in a way you can understand. Also read books, also read podcasts, also listen to Bloomberg. Let me recommend my book as well. I'm a Nigerian guy, but I've worked across I've worked in the US as well. And after all my life, is apart from when I started off, I've done finance, managing money for rich people, managing money in pension funds, managing monies across the world, right? So I've tried to write a very simple book you can understand. So if you get that book as well, it helps. Also on Twitter, just do the hashtag FinPlanBooks. I'm going to share FinPlanBooks. That's hashtag FINPLANBOOKS. I also curated lots of books that are just perfect for you. So if you want to do other books, just use that hashtag. You see lots of books I put there that are just great for you to read and learn. But I like YouTube. I like podcasts. Just there are many podcasts on money that I like. Every day you hear a podcast or every week you don't have the time. If you are driving, convert your car to a laboratory of learning. Instead of listening to music, hear a podcast on money. You pick up the terms. You understand how it works. You understand why there's upside, why there's this penalty, the same way. That's the best way I can advise you to go ahead.
Thank you very much, Kalu. I really appreciate this.
Well said. Yes, sir. Thanks so much. You have a good one, yeah?
Yeah, me too.
Okay, I've got Ade Kumisi, Adebumi, Adesewa. How you doing?
I'm doing great.
Excellent.
Thank you so much.
You're welcome.
Good evening.
Yeah, what's up?
So I am should I say an employer or should I say an employee? I am an employer, I employ people and I'm also working for people. But I think I have two issues. I'm trying to manage my finances. I'm trying to manage my own income from my business and also from my job. And it's very difficult in the sense that I make a lot of money per month, but to be able to manage it, to be able to attach which goes to savings, which goes to investment, which one am I spending on myself, at the end of the month, everything becomes clumsy. And I don't even know how I spend the whole money and which one went to which one. It's always clumsy for me. So I don't know if there is any way you can help me to track my finances, how I make my money and how I spend them.
Okay, so the first question is, so you have a gig and you're also employed. Well done.
Yeah.
Are you using any app to track this cash flow? Are you using anything at all?
Not at all. I'm not using anything.
Okay, so I think it's a very, very. I like this question. I wish I would like to work with you, really, right? The first thing you have to understand is we have to separate both incomes, the income you make and the income the business makes. We have to separate both of them first of all. I think, I'm not sure, but I think there's a lot of commingling of incomes and expenditures. And I think the commingling is because you just haven't had the structure. Before we go into business strategy, I think the simple thing to do is ask you, where do you pay the gig income to? What bank does it? Not the bank. How many bank accounts do you have?
I think I do have 3.
So one is there, so is anyone for yourself personally?
The only one that I have personally is my piggy vest that I just put my savings into.
So that's yours. So if you want to buy suya, where do you take the money from? Piggy vest?
No, I take it from my Money Point account.
And is the Money Point account for the business or for you?
From the business, basically from the business.
I hear you. So you see, the first thing we're going to try to do, right, there are lots we can do, but is to try to separate everything. If we separate everything, you from your business, we can have a better sense of what's going on. Do you have an accountant that not that you are paying every month? Do you have someone that has audited your books before?
No.
Okay, that's fine. You can do it yourself. There are many apps you can use, right? You can buy an app and you can key in, like, I'm not sure if Nigeria offers that, where the app can go into your account and record all your transactions. You might have to do it yourself manually. There's an app like Mint. There used to be a Nigerian app, but they're no longer available, where you get this app, you key in all your expenses, and then the app would code it for you. So utilities, supplies, power, it will code those expenses for you on what you are doing on your business side and also for your personal side. Because you are losing a lot of money from not claiming. Do you pay? Don't answer. But do you pay taxes? If you pay taxes and you cannot get your expenses listed out, you are losing a lot of money. You are leaving money on the table. So you want an app that you can code all your expenses you are making. You buy suya, you enter a cab, you buy coke. Those are business expenses. But if you don't code them, you can't claim them. Also, if you don't code them, you don't know if you're making money. Do you know how much profit you make and how much income you make? Do you know that?
No,
Okay.
I just make money from it.
I hear you. Fantastic. So let's do this, right? Just let's walk. Send me a DM, right? First of all, if you go to, I have an app that I can give you for free. I created it, right? It's online. You can keep coding your own personal income and your own personal expenditure, but it's not for the business. So, for instance, you can go in there, you can say, this is the income I make. It can capture the passive income from your business, but that is only for the business. If you want to do 3, you can do 3 and have one for your personal self and then do one for the business self. You can do that on the app. It's on my website. No, it's on my website. It's my name, carloaja.org. If you go there, you're going to see financial calculator. It's a big red column there. If you hit it, they're going to give you see where you put in your goals, you see your income, you see your expenses, you see your cash. Now, it does it automatic for you. So once you put in your income, it will sort of like do everything else for you. What you want to do today, this is Greatest 2025, is you want to have 3 books. Even if you go and buy 3 exercise books, even if you don't use computer, go and buy 3 exercise books. 1 for yourself, 1 for the business, 1 for business 2. You separate everything. If you make income, write it down. So that when you have an accountant, you just give him. If you want to have an Excel sheet, do the exact same thing. Excel 1 for the business 1, Excel 2 for business 2. Start to track the income and the expenses, just as we've done on this program. Track your income, track your expenses. Just do that alone. When you get the expert, you give that to him. He will give you your balance sheet, he'll give you your income, he'll give you your expenses. If you want to send me a DM, let me work with you. I'm not going to charge you, don't worry. Just want to use you as should we say case study, right? So just to organize all that for you. So, but you have to show that you want to be up and about, right? So let's do that for you. So first things first, we're going to separate everything from January 1st, right? So we're lucky. So January 1st, you should know every income that comes from business 1, from business 2, and your personal. So it's all separated. That's what I want you to do. Then number 2, you record them. Can you do that for me? Just separate and record. That's all we're going to do today. Separate and record them. By January ending, February ending, we'll get someone that will come and do your audits for you. Then you can have a picture. You might be making losses you don't know. By making profits you don't know. But let's start that. So send me a DM. Go to the website. Do that for your personal. But today you're going to do separation and recording. That's what we're going to do from January the 1st. Separation and recording. Right?
Yeah.
Perfect.
Thank you very much.
You're welcome.
And so my second question. I've been hearing many things about cryptocurrency space. I have a little knowledge about it. And people have been saying you buy crypto and you keep, you buy crypto and you hold, you don't buy and sell. I have questions about it. You see that Bitcoin is rise today and tomorrow you'll be seeing it down. What is happening? And tomorrow you just say, no, Bitcoin is 200%. I'm like, what crazy shit is happening that way? So I just want to have a little knowledge about it. I'm not diving into it yet. I just want to have a little knowledge about it.
But do you have any investments at all currently?
Yes, I do have.
Like what?
I only buy on Piggy.
So you just have money with PiggyVest, like you just save money with them.
Yes.
Okay.
Yes, and I buy their commercial papers.
Okay.
Any of their investments, I buy. Just 2 units.
So the commercial paper is an investment, the savings is not, right? So that's all you have, right? Okay. Do you have an RSA? Do you have an RSA? Retirement. Okay. So can you open up a retirement savings account for? Is it possible?
Yes.
Okay. Yes. So do that. So you've got the PiggyVest, perfect. Let's do our RSA. Then we can start you with buying. Because I don't know how young you are, but you sound young. What am I saying? So if you sound younger, I want you to do more of equities. So to invest in equities and shares, because then you can take advantage of your age and compound, right? Because at your what's the interest you are making from PiggyVest CP? What's the interest? Do you know?
Okay. Yes, I do. 12% or something. Okay.
Let's
Let me check that.
no. Let's assume it's 15%. Do you know the inflation rate in Nigeria? Do you know?
Yeah.
What do you think it is? So it's about 33%. So the PiggyVest money you are making money, but in real terms, which means in real terms you're not making money. So, but look at what I want you to look at it this way. The PiggyVest can be your emergency fund, right? The CP can be your savings, like okay, short-term savings. We have to get you into longer-term savings. That's why I want you to do the retirement savings account, and then we're going to try to buy you some equity. US equity, Nigerian equity. We're going to try to get you two of them, right? So, number one thing you're going to do, you're going to separate your bank account and from your personal account. You're going to have 3 accounts, either on Excel, on an exercise book, or on an app. If anybody has a Nigerian app that does it, send me a DM, I'll share it. But separate and record. That's what you're going to do. Number 3, you're going to open up an RSA. And then number 4, I'm going to try to open up an app that can allow you to buy shares. There are 3 companies that allow you to do this that are SEC registered: Chaka, Cowrie, and Bamboo. But when you talk on DM, I'll give you more information. So I want you to get into longer term investments. That's equities. We'll do all that before we do crypto. That's why I'm going to this long story. I want you to do all this because crypto is going to be 1 to 10% of your portfolio. It should be your main portfolio. You want to take advantage of your age. Your age is a big factor. You are younger, so take advantage of that before we do crypto, right?
Yeah.
Perfect. All right, super. Next questions. Appreciate you. Thank you. Let's get Uyosa. Uyosa, how you doing, sir?
Hi, I'm good. Thank you, Carlos.
Perfect.
Amazing. I've learned so much already. So I'm based in the United States, and my question is sort of like two. One of them is the ETF returns sound similar to mutual fund returns. So, is there any advantage of one over the other?
No, they're the same thing. Mutual funds, so ETFs, exchange traded funds. Mutual funds, the difference is that you can trade the mutual fund during the day. That's ETF, exchange traded fund, or mutual fund. So when you buy an ETF, you can sell it by 1 p.m., buy it by 3 p.m. With a mutual fund, you have to wait till the end of the day to do any trades, like a unit trust scheme. Also, ETFs have some tax advantages that mutual funds don't have. So I personally prefer ETFs than mutual funds and all that, just because of that flexibility. Yeah, but it's almost the same thing. Yeah, no difference.
Oh, okay. Awesome. That's great. That's good to know. Number 2 is, would you advise investing in Nigeria or the US? Because I know the US gives lower returns in USD. Nigeria gives higher returns in Naira. But if you convert it, I think I've done the calculation. It can be advantageous in Naira.
Yeah, I cannot give advice on social media. Let me just put that caveat in there. But let me answer this way. If you tell me more about you, I can tell you yes or no. But look at it this way: would you buy Messi if Messi was playing very, very badly, or if Messi was playing perfect? When would you buy Messi? When let's say Messi is playing bad or is playing good. When did you use a bad, good or bad time to buy? Would you buy him when he was playing bad or playing good?
When he was playing good for sure.
Okay, but if he's playing good, would his price go up or down?
Okay, go up. Sure.
To go up. So you buy him good or bad?
Oh, bad then.
You buy him bad. Because why? Why do you buy him bad?
So that because he will become good later.
No. So he's good. Good. So he's good, right?
Yeah.
But he's cheap because it's bad, Abi, because he's playing bad now. But he's good, Abi.
Yes.
Good. But would you buy me if I'm playing good or bad? Would you buy me? You hurt my face. Would you buy me if I'm playing good?
No.
No, you won't buy me because whether you buy me good or you buy me bad, it doesn't matter. I'm not going to play well. So you don't buy me at all. So the answer is that if you want to invest in Nigeria, you want to ask yourself, is Nigeria a good investment? Look at it this way. 1 out of every 4 Africans are Nigerian. Nigeria has crude oil, has gas, has coastline, has arable land, 24/7 power, the largest number of diaspora outside Africa, from Africa, the most educated Africans. It's so, with all this, do you think that place is a good place to put money in? Obviously, yes. The question is, when should we put money in, and where should we put money in? We can put money in, and for 10 years, it's a low-cost place, which means your money is just going to waste because people will just steal it or do nothing. Or you can put money in, and for 5 years, the place has a good president, and it's just booming. We don't know. So because we don't know, I would say if you have money that you can invest and forget about, Nigeria is a perfect place to invest. Perfect place to invest. Because if you are going from dollar to Nigeria, right, you are buying Nigeria at a discount. If I take a million, if I take $600, that's a million naira. If I take a million naira to my village, I can buy plots of farmland with $600. If that becomes good, I can't buy that land again with $600. So for the foreigners amongst us, the diaspora, you have an advantage. You are coming from a more expensive currency. The cheaper currency, you are buying Nigeria at a discount. If you take the dollars and you buy Nigerian stocks, you are buying an implicitly discounted market. So that's the answer for you. If you believe that Nigeria will turn around tomorrow, it's a great time to buy. If you think it's all over for Nigeria, don't waste your money. Keep it back with you. But it depends on your attitude to risk, how long you want to invest that money. I know a guy that took money and invested rents. He built a university house in Nigeria. He's getting his money back. But when he converts his money to dollars, it's nothing. But he gets his money back. So I told the guy, you haven't lost your money. You just don't have a way to invest the returns. So if you take your money and you go and buy palm kernel or you buy cashew and you export it, you've got your money back. But no one has that time, you see. So that's your answer for you, really. It's a discounted market. If you want to buy and invest, you can't go wrong. But then again, it depends on your objectives and your risk profile.
Okay, my last question would be, last question is going to be, in the US, like, which firm would you recommend, or like, just suggest? I know you cannot.
I would give you the answer. I would do Vanguard or Fidelity. Why? Vanguard, because they are cheaper. Vanguard is the largest. So your cost to purchase, they have very, very low expense. You notice I always talk about VT. VT. This is all Vanguard. So if you buy those stocks, you are buying, if you want to buy, if you want to buy all the stocks in the world, like i.e. the good ones, right? You just buy something called VT. That's an ETF that buys all the stocks. You are going to buy Microsoft, Tesla, Samsung, Toyota, all the stocks in the world. That's VT. But if you want to buy just 4,500 stocks in the US alone, you buy VTI. That's just VT, but just in the US, VTI. But if you want to buy in the US also, but only 500 stocks, I don't want to buy 4,500, I just want to buy 500 stocks in the US, then you buy VOO. That's 500 stocks in the market. See how I'm coming down? I went from the world VT, I went to VTI, which was about 4,500 stocks. I went to BOO, which is 500 stocks. But if I don't want to buy the US at all, I want to buy Samsung, and I don't want to buy US, I buy VXUS. That is all the stocks minus the US. If I want to buy bonds, I buy BND. If I want to buy property, I buy VNX. These are all Vanguard. So why Vanguard? Because it's large, so the cost to buy one stock is cheaper. You buy the same stock, but it's cheaper with Vanguard, Fidelity, and all. So I always go with them because of the cost here. They're not paying me. They're not paying me. I'm just saying, I use them, or you go through your bank. I normally buy through my bank and all that, but those guys also give you a good deal, yeah.
Oh, thank you so much. I really appreciate it.
You're welcome. I've got Jare Ajayi Oluwa. Yeah, hey. Go ahead.
Yeah, good evening.
Jare, can I please speak up? Can I please speak up a bit?
Yeah, I'm speaking. Good evening.
Hello, sir. Go ahead.
Hello, can you hear me?
Yes.
So, all right. So my question is, I want to ask about investment network. Do you have an investment network or a group of funders that are interested in power infrastructure investment in Nigeria? We have a couple of projects, especially mini grids. What I mean by mini grids is not this small scale.
Yeah, I understand where you're going. But
Hello?
I understand where you're going to.
Okay.
But we don't, not the right space for it. I don't, it's not the right space for it, but I don't really have the investors that can do this. Did he drop off? Yeah, not the right space for it per se. And even if I had investors not here, maybe send me a DM, but it's not something I think I do. I don't have I can't give you an investor. You need to talk to angel or seed or private equity people. That's what you need to talk to, Jai. There's something called Lagos Angels Network. See if you can Google it, Lagos Angels Network. See if you can go over there and see if you can get some because you're doing renewable power. See if someone can invest in you. You're not going to get foreign investment. It has to be local investment. I don't think you're large enough to get foreign investment. So see if you can go over there and see if someone can invest in you, Jai. Appreciate that. Let me get Frank. I've got Frank Jeff, Mr. Frank FF.
Yeah, good evening, Carlo.
Yeah, how you doing?
Yeah, good evening, everybody. So I have a question, yeah? You said something about inflation being 33%. I don't know if I got that correct. But that someone is making money in the page where she's not really making any money. So my question is, I have an investor. Given we calculate in the business, the profit and loss, so we found out that we made around, 80 million naira profit, and then we did expense of 18 million naira. Then we did the equity, and then we are 30 million naira short. So I couldn't account for that because I know the basic knowledge of accounting.
So Frank, I missed that.
Frank, all of that, but I couldn't.
Frank,
I couldn't. Yeah.
I missed you. You dropped off. Can you go over it? You lost money. What are you saying? I don't think I'm following.
Okay. So I said I was able to do the bookkeeping. I tracked all the expenses. So the profit we made is also the same as the expenses that we made.
Okay.
So when we did the equity, we calculated what's remaining in the business. We were 30 million naira short. I couldn't account for that or explain.
Pause. You invested how much in the business?
Around 100 million thereabout.
Okay, so that goes to your balance sheet, right? So now you said you made is your profit and loss. So how much profit or loss did you make?
Sorry, I didn't get the question.
So you invested 100 million. That's your balance sheet. So I'm asking you, let's go now to your profit and loss statement. How much profit or loss did you make?
18 million.
18 million. Okay, so there's no connection with your 100 million and your 18 million. I hope you know that because 18 million is your profit. So this 30 million you're looking for, you're saying you couldn't find it. Wait, it's in your balance sheet. It's not in your income statement. I'm not sure if you are following what I'm saying. If I take 100 million and I invest in my business, I buy head office, I buy a car, I buy a computer, and I do business. The business gives me 18 million. That's revenue. But revenue does not have the connection with my balance sheet per se. So when you say you can't find 30 million, are you saying you can't find where you invested 30 million?
Like 30 million was missing from the equity. We're supposed to see it in the equity, like everything in the business.
No. What do you mean by see it in the equity? The equity is your car, your office, cash in the bank. If I bring in 100 million to do a business and I take 10 million and buy an office and a computer, so I have office and computer, maybe 2 million, then I should have 8 million in the bank. So what are you saying? You're saying you don't have the money in the bank, or you don't have the computer or the car. What are you saying?
No, the equity I'm talking about is just the stock equity.
What
Just
stock
the
equity?
stock.
What stock
Yeah.
is that? The inventory?
Yeah, the inventory, yes.
Yeah. So now that's your balance sheet. So you bought Gala. You can't find then someone stole the Gala now. Someone stole the Gala. Abi, Frank.
Okay.
Someone has stolen the inventory, because if you bring in raw cash as capital and you buy stock, which is inventory, that stock is on your balance sheet. Then when you sell the stock comes to your income. So you bought maybe, let's make it simple. You used 100 million and you bought stock. So you have balance sheet worth 100 million. Then you sold 18 million. That goes to your income as statement as 18 million sales. That means that when you do your audit, your 18 million is a different book entirely. On your asset side, you should have one side to show your stock, 100 million, and your capital, 100 million. So when you sell that stock for 18 million, right, the balance should still be in your warehouse now, in your balance sheet. It should balance, your stock should balance with your sales. Maybe your bank statement or your debtor statement should balance your stock. Because the stock is leaving your company to be converted to cash or debt. So each stock will leave your company, you are going to get cash or debt. That's what the difference is. I'm not going to make it complicated.
So if we can't find it, means we missed it somewhere.
It means you're doing record when you have 100 bags of rice and one bag of rice leaves your warehouse. You should have on the corresponding side cash or debtors. It should balance. Your 100 bags should balance to cash in the bank or debtors. The point I'm making. So, are you working with an accountant?
Yes.
So that's an easy answer for your accountant. If you can't give you the answer, fire him, get somebody else. That's easy answer for your accountant. Yeah. Frank, it's a simple call for him. It's a simple call for your accountant. When you sell goods, you either get cash or debtors, and the cash plus debtors should equal to your inventory. So your balance sheet will balance. If it's not balancing, that means either somebody stole your stock, or you have no cash in the bank, or you sold money on credit and you don't know who you sold it to. It's one of these three answers.
So it doesn't have anything to do with inflation at all.
It has nothing to do with inflation, because you are going to carry that stock and still sell it. When you sell, your 18 million is where you are going to put your inflation, right? Your pricing. So if you bought your 100 million goods at 100 million naira, right? When you want to sell, you can add your inflation and say, okay, I'm going to sell each bag of rice at 100 naira plus 33% for my inflation plus my real profit. So that when you are selling that 18 million, you are capturing all those costs. So it goes back to my answer. Your inventory will now be equal to your revenue, right? That is your inflation adjusted revenue, right? And that revenue will go to your bank or to debtors. That's a different question. You're asking now that when you are putting your pricing, you should have taken into account inflation and your cost of sales to add to your cost, right?
We don't have that leverage because the fast-moving consumable.
What are you saying, Frank? What are you saying, Frank? You buy at 10 naira, you sell at 10 naira.
No, we sell at not much, but you have to sell it off fast.
At what price? You don't add any margin?
We add a margin like around 100, 150.
How do you determine the margin?
It's just what others are selling, so you can be able to sell off.
Frank. You have an accountant now. No. You can't do that now. You have a cost. When you have a cost, you have to sit down, if it's every day or every hour. You ask yourself, this is my cost, Abi. You have to know what your break-even is. You have an accountant. Write it down. What is your break-even? Your break-even is the price that you must sell that commodity to make a profit, or even to cover your cost. Not even profit, just to cover your cost. In that break-even, he will put inflation, he will put NEPA, he will put the last month, he will put everything in that break-even. He will tell you we must sell at for 15 naira to break even. If you sell at 14 naira, making a loss, that's where your capital is going to. That's why your capital is disappearing. If you sell at a loss, your capital will disappear because on one side you have 100 million, on the other side you have bank balance less than 100 million. That's the 30 million naira you're looking for. Frank, if you want to do consultants for you, I can do it for you, but I'll give you all the insight for you now, right? Your accountant can give you the answer. It's a very, very simple thing. You are just not, either you're not capturing your cost properly, or you're not capturing your sales properly.
The reason we are doing that is because we are a distributor.
It doesn't matter.
Production company.
It doesn't matter. You have a cost. It doesn't matter.
Every 2 weeks.
It doesn't matter. You have a cost. You must have a cost of sales. Then you sell and make a profit. Whether they increase the price every second, if you can't do the business, you can't stay in the business. You get what I'm saying, Frank? If you want to talk more DM, right? But let's I don't want to keep put you on. I can consult for you on this, bro. But it's a very simple thing. You are missing a very, very simple thing. It's either number one, you're not capturing your cost properly. Number two, people are owing you. Or number three, you're not capturing your sales. It's there. It's not a hard thing you are asking, but it is more. Should we say it? So do that, Frank. I beg. Yeah.
I'll send you.
Sure. No worries.
Thank you so much.
You're welcome, my brother.
Thank you so much.
Yeah. Let's get LVHD LVTF.
Hey, Carlo. Thank you for what you do always.
Okay.
I have a quick question, right?
Go for it, bro.
That is concerning government-backed securities and assets.
Securities, yep. I hear you.
Yeah, so, I've been doing some reading recently, and one trend is the increasing levels of foreign and domestic debt. I don't think it has ever been this high in Nigerian history. With the significant risk of declining areas for revenue. I think you also said something like that earlier today or yesterday. My question to you is that are there concerns, significant concerns when it comes to risk when it comes to governments defaulting on their debt obligations? And the reason I say that is because ordinarily when the government assumes debt, it is supposed to be used to fund capital projects, things that would earn revenue. But I think what we're seeing, especially for the domestic debt, is that the government is printing money to meet up some of their debt obligations. While for the foreign debt, they're taking on more debt to pay off existing debts. So, from your perspective, do you think a debt default is anywhere in the future?
Yeah, I mean, if you look at was it the IMF or no, Fitch? It was Fitch this weekend that said that Nigeria had to look at their fiscal deficits. What they were saying was this, that with every budget we've had, this year's budget, last year's budget, what we basically do is that we say we earn 10 naira, we're going to spend 50 naira. So we have a deficit budget. This is what we've done for as far as I can remember. But especially last two budgets, we earn 10 naira. Well, this is plus oil. We earn 10 naira, but we want to spend 50. So Nigeria is cutting her coat according to her size, not her cloth. That's a big problem. The problem is this: we are borrowing euro bonds, which is dollar, and we're also borrowing naira. In naira debt, we can print money and pay. The last administration borrowed the equivalent, wait for it, the dollar equivalent of $50 billion. And how did we pay for that $50 billion? We've printed 40 billion or whatever, $40 billion bond. We've printed that money. So Nigeria is printing naira to pay back naira. If you look at the budget, 45% of the budget is going to debt servicing. So if you just pay the debt and you pay salaries, the entire budget is gone. We are borrowing to repay borrowing. We are borrowing to repay salaries. Before we even get to building roads. So it's a big problem, because what happens if tomorrow oil price goes to $50 a barrel? Nigeria is done. We're done. Because at that price, even now, that's why we're not getting our budget, because at this price, we can't pay the debt that we have, especially this Eurobond. Nigeria's largest forex earner is NNPC. But NNPC is not in the budget. If you pull up the federal budget, you don't see NNPC. You don't see it in any state budget. When you see NNPC, it's in the subsidy payment that you are paying. NNPC pays subsidy. But look at what NNPC is doing. NNPC is also borrowing dollars and using the collateral of the Nigerian naira to pay, of the NNPC revenues to pay. So NNPC is borrowing, Nigeria is borrowing in dollar and naira. We borrowed $2 billion in December 2024 to service the 2024 budget. No typo. We are borrowing in December 2024 $2 billion to finance the 2024 budget. So it's a big, huge problem. As a matter of fact, it's the biggest problem in Nigeria today, because if oil goes to $50 a barrel, we are done for. Now, that's a big risk. The only thing that gives me a bit of confidence in Nigeria today is the Dangote refinery. Because as Dangote keeps on ramping up, he can export more products and get more dollars into the country. Dangote is a revenue source I don't think even the budget guys have anticipated would have that around. So Dangote might save the balance sheet, but I don't know how much, because they are still fighting him, So when he exports his byproducts, that's a new revenue stream for Nigeria. He's already the largest non-oil exporter with urea fertilizer. Imagine when he starts to export all those other byproducts, that's going to be a big savings. So that's my answer to you, right? The biggest risk today in Nigeria is that oil price is going to fall to 50 or 60, and we cannot manage that fiscal deficit, meaning that Nigeria will not earn enough to even pay salaries of army and police. Can you imagine Nigeria not paying salaries of army and police? So LVT, that's the answer. It's a big problem. I think it's the principal risk in Nigeria today.
And that brings me to my second and final question. Thanks for the insight that you've provided. Looking at the fact that the United States is a new president is coming, a new president that believes in fracking and expanding our production of energy, right? That is crude oil. I believe this could impact the global oil market, which could further bring down oil prices on the global market. I don't know if it is a wise idea now to invest in government-backed securities. Nigerian government-backed securities, which honestly is like a money printer looking at the interest rates. So, would you advise someone that is a novice, so to say, testing their feet in the Nigerian market? Would you say government-backed securities would be a stable source or a stable investment or trustworthy investment for now?
So what you're asking is basically, should I buy Nigerian federal government treasury? That's what you're asking.
I understand. Like use Axam. Yes.
I know. I hear you. So look at it this way, right? I'm not giving you investment advice. There is no good or bad investment. There's only an investment that matches your objectives. Yes, I saw that the risk-free rate, that's if you invest in Nigerian government bonds today for 1 year, you're going to get 29% risk-free, which means you don't take any risk. It will not default. The Nigerian government will never default on Naira. You know why? Because they will print and pay you. So if you give Nigeria 1 Naira, they will give you back in 1 year 1 Naira 30 kobo. Risk-free. Why should I go and invest like Ade Kumis is doing? Why should I get a shop when I can get 30% from the Nigerian government? Risk-free. So the Nigerian government is paying me more than banks will pay me. So it's a big problem for the economy, because if the government is paying you more than banks, everybody's going to go to the government, nobody's going to go to the banks, and nobody's going to create jobs. So it's a big, big, big problem. But it's the best investment today in Nigeria. That's the problem. Where else would you invest? There is no investment today that is regulated, that is beating inflation. Only the Nigerian stock market as an index is beating inflation, and they have particular individual stocks beating inflation. But where else would you invest? So the answer is to you, if you want to do bonds and money market, that means your mind is looking at short-term returns. Short-term returns. You can't find any short-term returns in Nigeria that is safer than the federal government bonds that is going to pay 29%. None. So the answer is, if you're looking for short-term, That's your best bet. If you have, but you don't have 50 million, that's the big boys. Your best bet is going to be in federal government savings bonds that are 2 and 3 years and pay you like 11%, and I think it's 13%, because you have maybe 5K. But if you have 50 million, your best bet is the federal government bonds, because that's the safest Naira investment. I'm sorry to say, but it's a big problem. It's not a good thing. It's bad, but it's 20%. So you take it. If you have a short-term investment and you don't want risk, that's your best investment. All right, you're welcome anytime. Let's get tech and solar energy. Paul Purity.
Good evening, Mr. Carlo. I'm so glad to be here. Thank you so much for what you do. Mine is a very simple one. I was in a class like this on WhatsApp, and the person was talking to us about investment, especially fixed deposit and all that. I want to, by next year, I'm thinking of doing something in that area. But where I'm looking at is I'm thinking of using OPay, because I've looked at their interest. One is their target saving is 15% per annum, and their fixed is 18% per annum.
Stop. Yeah, go ahead. What's the question?
Okay, my question is this. Somebody told me that if any bank or whatever is giving you on fixed deposits more than 5% per annum that you should run is fake. So I'm seeing this one 18%, and I'm scared. I don't know if I should do it or not. I'm asking.
What I would say is, if you want to invest online, I think only use the SEC registered platforms. And I'm going to just share a tweet now on the SEC registered investment apps now. I'm not saying that the other ones are not safe. I'm just saying these are the SEC registered ones. SEC has some registered. Some other apps are fully registered. I mean, PiggyVest has a license, right, and all that. Only put your money in the ones that have a license. I'm an investment guy, so I'm going to go towards SEC. That's what I'll say. I'm going to just share a tweet. I think it's Bamboo. Just share it now. Bamboo is registered. Bamboo. Okay, Bamboo is there. Then we have Cowrywise. So let me put Cowrywise. Cowry. Yeah, Cowrywise. Then we have Shaka. Shaka has been bought by, I think, Rise. So put Shaka there. Chaka. This, I'm not saying the ones Shaka. How do you spell Shaka? Who knows? Yeah, Chaka stocks. So I just share this. These ones are the SEC registered ones I know. If I've missed anyone, please send me a DM. I'll add them. So number one, only go through the SEC registered apps. Number two, my brother, interest rates revolve near what we call the MPR. MPR in Nigeria is the monetary policy rate. It's almost 25%. So banks paying you 5% are cheating you. You shouldn't put money in any bank paying you 5%, but you should not put money in the bank paying you 100%. I'll be worried. So I would say, like I said, the federal government is paying you 29%. You can get many guys that can pay you legally more than that. We had these guys from, what's their name? I do on this space, paying almost 30% if you invested for the first time. Let me get their name for you. Bankley. I don't know if you were here. I shared Bankley a long time ago. They were here. They were offering a promotion for at almost 30%. So if you Google Bankley, they are a microfinance bank, right? They also have high interest rates. You can also go with them as well. So there's lots of legal folks that can pay you more than that 5% that are registered. That's where I would go to. But again, remember, this is savings. It's short term. I don't think you should put money in the savings account for a longer term, because it's fixed income. It's not based on inflation. It's a short term exposure. Did you have a follow-up before we move on?
Okay, I'm okay.
You're good?
I appreciate it.
Perfect.
I appreciate it.
Perfect. Let's get Mazi in also. Mazi, what's up, man?
Yeah, good afternoon.
How you doing?
Fine. Okay, so I was random thoughts usually come to my mind, so I thought I should run it through you in investment that you have. Okay, I actually live outside of Nigeria at the moment. I'm international students, so most of the funds I get decision to set up my tuition fees and all of that. And in the West, there is a credit system and it's a borrowing system. And so I was wondering, would it be wise for someone to take credit cards, like draw down on credit cards, get them, draw them down, and invest the funds? Does it make sense?
Simple answer is no. Answer is no. So if you are in the West and you are a student or you don't have a job, get a credit card, not because you want to spend, but because you want to build your credit score. That's the only reason you should get a credit card. So I would get a credit card that gives me points. So for instance, say if I spend $1, I get points. Either it can be cash or it can be miles. I would use that credit card, not my debit card. So I build up a lot of points and I use the points for free. But I'm only doing that because I want to build my credit history, not to take a credit loan. Should never use a credit card to invest, because what happens in the first of all, the credit cards are not stupid. You will not see any investments in America that will pay you more than a credit card. None that will pay you. So you can't take credit card money and invest in a place that make more money. What people try to do is, because credit cards don't charge you for the first 30 days, so people try to sneak and use the credit card, do business for 30 days and pay back without paying interest. But what if you fail and you then have to pay interest? You've lost all your money, because credit cards are the most expensive form of borrowing in America. They are almost 30%, 27%. So it's not a good idea. So if you're a younger guy, you're in school, you don't have the means to pay off your credit card every month, get the credit card, but don't keep a balance on it. Get it for the points, get it for the credit history. Don't try to use the credit card to invest. That's as simple as Samazi. Thank you so much. You're welcome. Perfect. Let's get in Trust in Chem. Trust in Chem, what's up? Trust in Chem, you are live, but you're not speaking. Go ahead. In Chem, fix that. Let's get Mr. Chris. Mr. Chris, how are you doing, sir? Mr. Chris, go ahead.
Yeah, hi, Mr. Han.
What's up, man?
I greet you. I'm fine. Okay, I've been listening to you. This is my first time speaking on this space. I'm really on a crossroad, so I don't really know what to do at this point. I already have a lot of stocks. I'm a businessman. I have a business that I'm doing currently in Nigeria. Although it's a small business here, but at least it's fetching me a lot of money. So next year, so I'm even planning to open another business, another kind of business of which I don't really have any knowledge about it. But at least I have someone close to me who is going to manage the business. Yeah. So I don't really know what to do, because keeping money in the bank, I don't think is advisable. But I really need your advice.
I can't give you advice on what to do with your money. It's not possible on social. I don't know you. I have run risk analysis on you. I can only do that. I can only hold on, Emmanuel. I can only do that when I understand your objectives, what you want to do. I can give you advice. So if you want to do that, you can send me a DM. I will charge you, and I'll do whatever on you. But I can't tell you what to do with your money. I can't give you advice. You understand what I mean? So if you want to do that route, hit me up on DM. Yeah.
Okay, sir. I will show you.
Yeah, perfect, Chris.
Can I go ahead?
Go ahead.
Can I go ahead?
Go ahead.
I wanted to ask you something. I was thinking of starting a farm business by next year. Although I'm a salary earner and my salary is not up to the minimum wage, and I don't know if there's a way I could go into it and still go ahead with my own normal feeding and all the stuff like that.
Do you think it's possible? How would you buy fertilizer?
I was thinking of just making use of manual means, like this local feed from shit from chicken and.
Let me just speak. Let me just. I don't want to sound cool, but if you don't have capital, you can't go into business. It's not possible, because your business needs capital. So you can start off a small garden farm, for yourself. But I don't see how you can do business. Farming is a business, right? If you farm chickens and you have the eggs, how will you get those eggs to market? If you need fertilizer, how do you fund it? Perhaps you should start up a small farm, then get family and friends to invest in you. Get one small shop you can sell them the produce and say, okay, hey, this small shop, if you guys pay me in advance, I can supply you with tomato, things like that. That's how you want to start small. What do you want to grow?
I was thinking of cassava.
Okay, so if you're going to grow cassava, where are you going to sell the cassava to? Do you have an off-taker?
Kind of.
It can't be kind of now. It has to be. You have to write a business plan that will say, if I have cassava, this is my off-taker, because your off-taker is your revenue, right? So if you don't have all those things, you've got to write it down on a business plan. Say, if I'm going to farm cassava, I will get so tons. I will sell to this person. That off-taker is your main source of revenue. If you come to me and you say, hey, Kalu, I have an off-taker, but he pays me after 90 days, but I need cash. Now we have a problem we can solve together. But you have to show, you have to show your workings. I'm doing this, I need to expand. But do you understand where I'm coming from? You can't.
Yes, I do.
This sort of business, I would say, start small, learn the ropes, go and work for somebody, learn what they do, how they do, and how they save money. Then come and do it on your own plot. You do small. You have a guy in the village, in the town that has 100K is not using. He gives you 100K. You invest in your farm. You give him back returns. He will tell his friend, "We'll give you 100K." You invest in your farm. You give them back. That's how you do it. Family and friends. You can't be talking about the business for now. Start small, family and friends, grow your farm, get an off-taker, start like that. It has to be a process. You get what I'm saying? It has got to be a process. Yeah?
And so I also have another question to ask you. I've been learning about trading the Nigerian stock market for like a while. But based on I don't have large capital in the business, although I'm good at it, but I don't know if there's any way I could use my skill to generate funds for myself.
Not really. When we started off this space, and also the other spaces have emphasized that investing is not the first or second thing that you do. If you write up a budget and your income cannot cover your discretionary expenses, you should not be investing. If you draw up a budget, the very, very first thing you should focus on is an emergency fund. We won't talk here about buying insurance before you talk about investing. You've got to sort of do those ones first. If you are single, you don't have dependents, you don't need insurance. But if you are single, living in Nigeria, your emergency fund is more important than even your investment account. There's no point buying investment that you're going to sell tomorrow to pay for diesel. So I would say focus on learning, building an emergency fund, growing your income. The most viable investment you can do right now, sir, is to take your income and learn a skill and increase your income. And buy stock. You are a stock. You buy stock in yourself. Go and learn something that doubles your income. Learn a skill that will double your income. Then that way it's easier for you to invest. All right?
All right, thank you very much, sir.
Appreciate you, sir. Someone is asking a question on DM. At what point can someone say they've invested in themselves enough and they have enough earnings to start investing in equities? I'm not sure what the question you are asking. Investing in equities is investing in yourself. And so when you want to invest, you want to answer this question: why am I investing? Usually the answer is that you want to invest to meet an objective. The easiest objective is that you want to retire. If you want to retire, the objective then becomes you want to make passive income that can pay your expenses. When you invest in equities, you are taking your active income to do an investment that you hope would pay you passive income, whether it's in the diaspora or in Nigeria. Your objective is to convert active income to passive income. Look at the list of the richest men in the world. All of them make money from passive income. From Elon Musk to the guys that own Google to Bill Gates, they all make money from passive income, not from active income. Bill Gates does not go to any office to work to get paid. Elon Musk does not go to any office to work to get paid. They are making their money from equity holdings, passive income. So you should copy them. So that's your objective. Convert your active income, whether in Nigeria or America, to passive income. Then the passive income then pays you. Whenever your passive income can pay your expenses, that's when you have arrived, right? Let's get future ruler, future native professor. How are you doing? Future native ruler. How are you doing, sir? Going once. Future. Okay, go ahead.
Okay, sir. Thank you for the opportunity to come up here. Quick question here. I want to ask, amongst the top U.S. companies, stocks, which one will you advise to buy and keep on the long run? Why I'm asking this is this. I bought NVIDIA this year for, I bought it like August or so, for like $400, which was like about 600 or 650 at the time. Someone advised that I should just buy it, that it has potential since Trump is coming in February or January next year. And I bought it, but I've lost like $42 already on it. So I have about like 370 something or 360 something or thereabouts on a platform. And I've been following like trends on one app like that, and I've seen that is Tesla that is kind of gaining momentum now, and their decrease have not really like been much. So I'm looking at either converting my NVIDIA and add more money to buy like 1 million Tesla and see if I can hold for a year. But I don't want a situation where I'll buy another one and I'll just continue losing money.
You know what I like?
So which one will you say I should buy?
You know why I like your question? Because it allows me to then talk about what you're doing wrong. Sorry, I don't want to air you. What are you doing wrong? You are churning. You are buying an investment that you should hold and forget about for the next 2-3 years. You are buying it to sell, to trade. You are making more money for your stockbroker than for yourself. When you buy stocks, your holding period should be indefinite, or maybe 3 or 5 years. NVIDIA was up and down, up and down, up and down. But I challenge you, go back 10 years and plot your graph. Is NVIDIA up or down? It's up. If you sell today and buy Tesla, investing is like, you know how Lagos go slow is? You know how Lagos go slow is? You are on one lane. The lane on your right-hand side starts to move. So you leave your lane and go to that left-hand side. As soon as you leave your lane starts to move. Then you want to rush back to your lane. All that going back and forth, you are wasting fuel. But if you stay on Third Mainland Bridge, there's no how you won't get up to Third Mainland Bridge. All the cars will just keep on moving forward. The point I'm making is that buying and selling is trading, is churning. You are paying brokerage fees. You're not getting the advantage of equities. The advantage of equities is that you can buy, hold, and compound. If you can't stay in the equities market, then don't go in there, right? Don't go in there to buy. NVIDIA, if you want to buy a company, only 2 things matter to you. Is this company going to be around for the next 10 years, and will it make a profit for me? Do you believe NVIDIA will go away in 10 years? That's the question. If the answer is it will not go away, then why are you selling? Leave it your money there. Why are you selling it? If you think Tesla will not go away in 10 years, okay, get new money and buy Tesla. But when you buy, sell, you are making a loss because you are paying commission fees from your principal. So it goes back to your first question: which company should you buy? Why not buy all of them? Why not buy the index? If you buy the index, you're going to buy NVIDIA, Tesla, and all them all together at once, because you don't have the money to trade. But if you want to buy the individual stock, you have to go back to why are you investing. If you're a trader, no problem. You can do this buying and selling, but you need capital to trade. If you're not a trader, then just stay locked into the market or buy the ETF, diversify, and stay long-term trust. Okay? You get where I'm coming from?
Okay.
I think you're doing it wrong.
Okay, sir. I get you where you're coming from. I'm not a trader. I just buy and leave it there. But what I'm asking is this now. I have another money to buy, and I've been losing money on Nvidia. So, do you think I should just buy more Nvidia?
When did you buy Nvidia? When did you buy it?
I bought Nvidia in August.
That's just yesterday, bro. Warren Buffett has bought shares for 40 years. He hasn't sold. You bought in August. You are getting worried. So the market is not for short term, right? At least, why don't you hold for a year? I'm not telling you whether it's good or bad. I'm saying it's not a market where you buy in August and sell. You just said you're not a trader. So the question for you is: do you know the price earnings ratio of Nvidia? Do you know what that number is?
I've been reading up, but I don't really know.
Okay, so you need to have data to back up your conviction. If you want to sell, why are you selling? Will Nvidia sales fall in the next quarter?
No, I'm not even selling.
Okay, so I mean, I'm not saying you should hold bias. I'm saying you want to have a reason, a fundamental reason to sell or buy. The best predictor of a stock price is future earnings. So the question you want to ask is, do you think Nvidia's future earnings is going to go up or down? If it's going to go up, why are you selling? If it's going to go down, okay. So you want to think long term. If you want to do short term, do fixed income. Yeah, okay.
Thank you so much.
Yeah, you're welcome.
Thank you so much.
Let me get sorry about that. Shadrach, what's up? Shadrach, your hand is up. Yeah, sure, go ahead. Shadrach, yeah, going once. Okay. OBD, please, how are you doing?
Yes, I'm doing well, thank you. Thank you for the opportunity.
Yeah, go ahead.
Yeah, well, not to take your time, because I think one of the things that I wanted to ask, you already answered when you responded to someone. I've been following you for a very long time, bought your book, I've read through that book, but I still wanted to, have some kind.
Where's your best chapter?
Okay, so where you talked about equities, that chapter, where you talked about equities and stocks, that was where, I concentrated a lot more. But other than that, the other places, you made some really good points as well, and I think one of the last person you just answered, I was listening to you answer him, and I'm remembering, the place where you really took time and detailed these whole price earning ratios, on stocks and how to hold what you need to look out for. Yeah, so I think for me, I wanted to ask you, if someone wanted to consult with you, how do we go about it? Is it to send you email, send you a DM?
Send me a DM. I mostly try to do it for free, unless it's a big thing.
Yeah, sure.
And I have lots of guys that I work with I can send to them. But yeah, send me a DM if you want something more complicated. Yeah, that's fine.
All right. Yeah, thank you very much.
You're welcome, baby. Thanks for buying the book. I appreciate it. Let's get Manuel_Plight. Manuel Tranquil.
Hello. Actually, this is my first time on your space.
Hey,
but I've been following you on Twitter for some time now.
Appreciate it.
And I really enjoy what you do. So my question is, but I think you already answered it while you were answering the other guy's question. Because during my initial stages of investing in stocks, I really experienced what the previous speaker experienced, whereby I was holding some companies for a period of time, like at least a year. And at the end of the day, I see that I am down by at least 30% and all that. Then, so my question is, so you've already answered it, but it's still the same. Is it better investing in individual stocks, or we should just go for the ETFs? Like, which one do you think is safer and gives lower return? Lower risk and at least reasonable return without risking a lot while investing in them? Is it the individual stocks or the ETFs?
So all things being equal, because the ETFs are a basket of securities, there's more diversification. Look at it this way. If I buy 10 strikers and I buy one striker, where is my risk spread out more? Out of the 10, I might have 8 flops, but one would be Shevchenko. So I've made I'm okay with that. But if I buy one striker and that striker flops, it's gone. So it's just that way. An ETF is a basket of securities. So because of that, it is more diversified than just buying the individual stock. That's why we always go for index ETFs or mutual funds, because it diversifies the cheaper price for you. That's the first answer, right? But again, remember, the ultimate answer is, why are you buying? If I work in company A and I see that company A is just making so much money, or I sit down in Lagos and I see a particular, let me look for something like this. I see maybe tomato juice coming to Nigeria, and everybody's buying that tomato juice. People are buying it left, right, and center. I find out that the tomato juice is being made by a company in in Bauchi State. From their tomato veg fruits in Bauchi, I find that the company is making tomato juice. What would I do? I'll go and buy that stock, because I know that company is going to make a lot of money, because people are buying their stock in Lagos. So if I have information, I can buy the individual stock directly. But if I want to invest in a cheaper way, in a diversified way, of course I'll go with the ETF, right? That's basically how I'll do it. Make sense?
Yeah, thank you very much for that. Sorry, I still have another question now. And it's between the US stock market and the Nigerian stock market. Okay, because recently, right now, I see that it seems like Nigerian stock market is really doing really, really good. And like, for example, I see something like Transcorp. Transcorp went up about plus 600 this year from February. So what do you think, between the US stock market and the Nigerian stock market right now, which do you think is actually like more profitable right now?
Well, the answer is already out there for us. If you look at the past 10 years, the US stock market has returned more in terms of return on the total stock market index. If you are measuring via ETFs, the US market over the last 10 years has had the highest return across the world. If you are comparing it with US equities, with Japanese equities, American, UK properties, Colombian, anything you want to compare it with, the American stock market has been the best performer over a 10-year period. So really it goes down to you. These are two different markets. If you are buying the US market, you are exposing yourself to dollar returns. If you buy Nigeria, exposing yourself to Naira returns. To the US economy, Nigerian economy, it's your call. Where do you want to be exposed to? Do you want to be exposed to both? Fine. Then you do an allocation that's maybe 80-20 or 40-60, whatever you want to do. There's no best in investment. I repeat that statement over and over. There's no best in investment. You have to invest according to what suits or fits your profile. If you are thinking of moving to America, of course you want to get exposed to America. If you are a Nigerian in America, I think of coming back to Nigeria in, say, 20 years, of course you want to invest in Nigerian equities. It has to be based on your objectives. But in terms of the actual numbers, what the numbers tell us today, the US market has beaten the Nigerian market and every other market over the last 10 years. Yeah.
Yeah, thank you very much for that. Thank you. I really appreciate it.
You're welcome, man. No worries. Let's get Nerd _Zinal.
Yeah. All right. Thank you so much. Thank you so much, Mr. Carlo.
How you doing?
Yeah, thank you so much. Yeah, so earlier this year, around April, right? I think I had about 100K Naira, right? So I just felt like, oh, let me get a stock. So I bought in Tesla, and yeah, to be honest, I made about, right now, maybe about 150%, right, in total returns. So but at some point, I just felt like I needed my income to grow, and I was just focused, just like I've always tried, to build my emergency fund. Right now, I think maybe I have a few I want to this year. Well, I feel like Tesla has gone parabolic, and maybe just to wait for the next stock split. But I think I've been looking at quantum computing stocks, maybe stock around AI. So I just wanted to get your thought. What do you think about? Are there things you think are here to stay? Quantum computing stocks and AI as well. Just wanted to get your take on that. Maybe there are little things I can put in and maybe get a good return from.
Yeah, man. So, this AI thing, when I first hearing AI, I just said it's all these tech people doing their thing. It's just a new fad. Let me just tell you something, right? AI is going to revolutionize the entire world. I haven't seen anything that's going to change the world the way AI is going to change the world. And when you hear AI, you think it's some esoteric thing. Let me make a point to using myself. I write. So I write. It took me almost 3 or 4 years to write a book. Do you know there are apps that are AI that you can take? You can tell the app the name of my book and tell it to write that same book, but just change the name from Carlo to Kenny. It will do it in 5 minutes. The entire book. So imagine if you're a company, you do accounting. I know a lady in the US. She does auditing for medical. So when you go to the hospital, they send you your bill. She would look at the bill and say, this is good, this is real, this is not real, things like that. She went to AI. She works for a company. She went to AI and wrote an AI program. So when the company gives her the job, it normally takes 2-3 days. She takes 2-3 days to do the batch and send back. She feeds the job to the AI. The AI does that job in 5 minutes. 5 minutes. So she has 3 days to do any other job she wants. She does it. That's what her literally real life story. So imagine if that company finds out as an AI that can do the job they are giving to this girl to do. What will happen to her? Of course, they're going to fire her. But what happens to that company? That company gets more profitable because they don't need that girl to do that job for them. So productivity is going to go up. Companies are going to make more money because of AI. Really, you can't even imagine. There are banks now in Japan, I hear that when you apply for a loan, when you apply for a loan, the bank will look at your credit score, your debt to income, maybe your utility bill. These guys use almost 600 metrics to see if you're a good lender. They use things like, is your phone always constantly powered on or off? They believe that if your phone is constantly powered on, you're a better investor because people that leave their phone fully charged are more careful, hence they are better investors. But no human being can track this. So their AI in 5 seconds can scan 600 metrics about you and say yes or no to a loan application and tell the guys that don't feel like going to get loans, it will just drop them. So imagine a bank today that is hiring workers in loan department, risk management. AI is going to replace all that. From how you drive your car, the AI can tell if you can pay your loans. No, it's not science fiction. Real life. So what will happen to many industries that many industries are going to change? And you're going to find winners. You're going to find a bank who start off today and become bigger than the banks you see today using AI. What's a bank? A bank takes deposits and lends out. But a bank needs to know how much deposit it needs before it can lend out, right? What if I have an AI that tells me only take deposits based on loans I want to make? Then I don't need to be as big as any bank today. I can be at $100 million and make more money than you because my AI is telling me, no, just have this capital and lend to this person. Do you get where I'm going to nearly? So AI is really going to revolutionize and change what we know today. That's why you see them all. I hear that Elon Musk bought Twitter to train his AI. The whole reason why he bought Twitter was to train his AI guy. He was an investor in Sam Altman's ChatGPT and was non-profit. Yeah. Then he left. So every company from Google to Microsoft is investing in AI. That's why Nvidia is blowing up because they're building the chips that are going to power all this whole new thinking companies. So there are good uses, there are bad uses. It's going to change everything. So that means that any company that is exposed to AI is a winner. The question is now is what we mean by exposed. If I'm an Nvidia that makes the chips that go to the AIs, I'm fully exposed. If I'm the caterer that sells lunch to the company making the chips, I'm going to make a lot of money. You see where I'm going to? So the trick for you as an investor is to try to draw your circles. Everybody knows Nvidia, but who supplies Nvidia bottled water for their staff? Who supplies Nvidia the chips that they use to make the chips to make their chips? Who is in that value chain? If you can find the third, fourth guys that are making the things that the guys make to make the things that the guys make to supply NVIDIA, that's your money guy right there. Because they are so far off that nobody knows them. You see, when you see a finished company, Microsoft, you see an iPhone has many suppliers. You can buy Apple, or you can buy the supplier that makes the displays that are going to Apple. And that supplier that makes the display that are going to Apple is going to be cheaper than Apple because nobody knows that guy. So for the investor, you've got to find those guys in the periphery that are in this AI space because they are cheaper. They are mostly small companies that are trading out of the NYSE or smaller cap companies, small caps, and you want to invest in them. That's basically your that's your money route right there. NVIDIA is done. What I mean is done. You're going to make money from NVIDIA, but you're going to buy it at $1,000 a pop. You see the point? Tesla is gone.
Yeah.
You're going to make money from Tesla, but you're going to buy it at $500 a pop. So you want to find the guys supplying the brake pad to Tesla. That's what you want to invest in because nobody knows them. So you get them early and you ride that wave. But anything AI, anything quantum computing, you see right now America is restarting nuclear plants, small nuclear plants to power quantum computing. So there's a nuclear plants in New York are being restarted and all that. So quantum computing now is anything that is in that's the winner for you. Quantum computing, nuclear power, AI, anything that's going to power this new economy, you want to be there. That's essentially it.
Wow. Thank you so much. This is our secret. Thank you. One last question, Mr. Kalu. So last week, I think someone came up and was talking about the renewed homes, right? Federal government giving out mortgages. So I went off, I looked at it, and maybe as a young person, it's really difficult to really think about building a house, getting the land, and all that. So I felt it could be a good option. So I checked the locations. I saw Nasarawa, Abuja, around 12 million naira for 3-bedroom in Nasarawa also. So I was considering, but again, I was thinking sometimes federal government's projects can be so messy, right? You just have to keep doing so, rebuilding again in that, maybe in a house, you just get a mortgage for. So I just wanted to, I know you said you were going to bring them up or something. Just wanted to get your thought for a young person. Is something wise, maybe you think is it logical to go into get a mortgage for that?
I like it. So listen, all this federal government is a risk you are taking, right? But the reward is worth the risk. They are asking you, the federal government, that because remember they are politicians, so they want to show success. They are asking you to pay $5 million and get a house. I will do it. If I was in Nigeria and I was young like you, I would do it without thinking. What would I lose? $5 million. What if I gain? I get a 3-bedroom flat. Even if they don't build that 3-bedroom flat, they give me the house, just the land, and its carcass, it's still worth it. Because if I had to go do that myself, I have to buy the land, get the paperwork, get the cement, and build. That's fine. I'll still take it. So I would say if you're young or you have the connections and you can get that renewed hope, go and get it. You know, whether it's don't do is Tinubu's thing. If they come here, and if you know them, anyone that knows them and they want to bring them here to talk, please invite them to come. I will give them the exposure. We will talk about it. Buying a mortgage or buying a house in Nigeria is one good investment because of course it's going to beat inflation for you. If you are going to live in that, you're not worried about inflation because it's your cash that you're using to pay the rent, right? So you're not worried about inflation. You're going to buy an asset that can rise with inflation. So buying your own primary residence in Nigeria is to me one of the best investments you can do with your cash right now, right? So I would say if you have the means, get it. If you get it, don't even think about it. What can go wrong? They give you a carcass for $5 million, and take the carcass and build it to your taste. So that's what I would say. Yeah. All right, brother.
Thank you so much, Mr. Khan. I'm grateful.
Hey, you're welcome, man. No worries. Yeah. Let's get Ernie. What's his name? Ernie_cyber. Ernie Cyber, what's up?
Good. How are you?
I'm doing very well, bro.
All right. Thank you for the opportunity, Mr. Khan. I have 2 questions. Number one, in 2008, I bought some shares. That is Name Insurance and First Inland. At the time when I was still in Nigeria, they were giving me some dividends, but for a long time, I don't know anything about the share again. But I still have my CSCS number, and some other information regarding the shares. So I don't know how to go about it to, research information about the share and maybe probably speak to a broker. But I don't have any information of the broker I used then to, purchase the share. That's number one. I don't know the advice you're going to give me on that. Then the second question is, I live in the US, and here in the US, companies have like a 401k retirement savings for their employees. And since I started working with my company, the Nigerian in me have not allowed me to actually invest with 401k because even though I understand how it operates and other things, personally, I decided to save my money with banks that have like a huge percentage of API. That way, I know I have access to my fund. And also, I know I can take it anytime I want. And I also know that I'm receiving some benefits from it, like interest every month or something like that. Do you think I'm doing the wrong thing, or do you think I'm not going the right way?
Oh,
thank you.
Bro, you're breaking my heart. You just joined my space. It's the first time on my space. First time here.
No, actually, I've been following you, and sometimes I join your space, but this is my first time of speaking.
Yeah, but anyway, we've talked about 401k. I think I don't know how many times I've said about 401k. I've said it over and over, right? If 401k is what we call a qualified savings. You're in America, qualified savings account, which means any dollar you put in there is protected from taxes. If you put a dollar in the bank will charge you interest. You pay to the IRS taxes on interest earned. That's what your 1099 is. So every year, of course, your bank gives you a 1099, which means you are paying taxes on the money you have in the bank. But in your 401k, you do not pay tax on the growth of those assets. So once you work for a company, and it's in my book, I've said it here, you want to do your 401k before you even invest. Because you want to take advantage, number one, of the salary increase, number two, of the match, number three, of the tax benefits. So if your company does a 401k, it's your money. They can't do anything with the money. They can't touch it again. All you have to do is to make sure that you don't buy their company shares, so you diversify. You can do that. If your company is giving you a 401k, find out on Monday, sir, what the match is. Whatever that match is, you must, look at my words, MUST, you must do it and match, minimum match. When you put in your 401k, America allows you to say where you want that 401k to go. You can still take that 401k and buy the same bank things that you are buying. You can tell the 401k to buy you a CD, but you don't pay tax on the growth of the CD because it's in a 401k. So you can do exactly what you are doing, but do it in a tax qualified account. You don't pay taxes. Your largest expense in America, as you know, is your taxes. You can't avoid it, but you can defer it with a 401k. So make sure, sir, on Monday that you ask your HR person what's the match, and then you sign up for your 401k and you do minimum that match. No arguments, any. Just go do it. That's number one. So just go do it. And also, apart from your 401k, also write this down: an IRA, an individual retirement account. There are two types. There is the traditional, there is the Roth, ROTH. I don't know how much you earn. If you earn too much money, America will not let you do a Roth IRA. But you also want to do an IRA. IRA simply means an individual 401k, sort of. So you also put money there. It also grows tax deferred. You are not taxed till you take it out. So you also want to do an IRA. Why? If you earn 10,000 and you invest 1,000 in your traditional IRA, according to the IRS, you only earn 9,000. So you only pay taxes on 9,000. So what you can do is this: April 15th, you have to pay taxes, Abi. When you do, I don't know who does your taxes for you. When you do your taxes and the government says, Ernie, you're owing us $2,000, why pay the government $2,000 when you can write yourself a check and pay to your traditional IRA of the same $2,000? It's in your name. It will be invested for you. You're not paying taxes. You would have still paid that tax, but now you put it in your IRA. So Ernie, you do your 401k and you do an IRA. Talk to your advisor and see which one should I do. IRA, Roth IRA or traditional IRA, but your 401k, that one you are doing on Monday, right? Let's get to your second question. Just if you're in Nigeria or you're ever in Nigeria, just go to the registrar of NEM. Find out who it is online. Just go there yourself. Take 2 forms of ID. They will print out all your dividends. They will print out all your bonus and give you. Very, very seamless. Also register with them for what they call e-dividends. Why you haven't been getting dividends? Because they are now doing e-dividends. So if you have a bank in Nigeria, just do e-dividends. So going forward, you just pay your dividends electronically from their registrar straight to your bank. So you can talk to your broker in Nigeria to do it for you. They'll charge you. You write a letter and say, hey, please investigate and collect my shares. They'll do it for you. They will charge you, all that. So it's either you do it with your broker or when you're in Nigeria, you go yourself and do it. Easy stuff, yeah?
Okay, thank you so much.
Perfect. Let's get to Great Alfred Orbit. Great Alfred going once. Great Alfred going twice. Ogbonnaya, what's up? Ogbonnaya R14355. What's your mind, Ogbonnaya? Ogbonnaya going once. Ogbonnaya, hey guys, if you want to speak, be around, right?
Okay, Great Alfred is here.
Background noise, Alfred. Background noise. What's up?
Hello, can you repeat clear now? Is it better now?
Hurry up. Go ahead. I'll transfer. Go ahead. Hurry up. Go ahead.
Okay. Good evening, Mr. Kalu. Thank you for the opportunity to speak in your thing. My question is, I'm planning to invest.
Alfred, I'm so sorry. I can't hear you. Send me a DM. You have tons of background noise, so send me a DM, right? Send me a DM. Yeah. Okay, let's get the profitable man.
Okay, good evening, Mr. Kalu Aja. Thank you so much for the opportunity to be here. I'm a really follower of yours, of your post, and I've been following for so long. So my question is that I've been investing for so long. I'm still a young guy, Nigeria student. So I've been investing into ETF, mutual fund, FGN bond, both US and Nigerian markets. And I also have community, over 1,000 students I'm teaching about stock markets and investment generally. So my question now is that every time I invest my money, I'm a kind of a value investor that I invest for a very long time. But it gets sometimes, Nigeria stock market is like cyclical. I don't know how to call it. Like it's a circle, market circle. There are times that I make profit of maybe 500% profits, like Ohando. I make over 100% profits, like Ikeja Hotel and Transcorp. But my problem is that I don't know where to take profits. Like I don't know. Okay, this is the right time to take profit out of the market and then put it in another market. So I don't know if you have any advice for me when to take profit and then, before the market turn over again.
So just to be clear, you are trading. Is that what you are trading, right?
No, I'm not trading. I'm investor. I'm not trading.
So you're a long-term guy?
Yes.
So why are you selling?
We can't. I can't just. What I'm thinking is that it can't just be there forever.
Why not?
It can't be there forever.
Why not? Why not?
I think it's good to eat the fruit of your labor sometimes.
Well, you said you're a long-term investor.
Yes.
So the point is that if it's making money for you, why are you selling it? If Drogba is scoring goals, why are you selling him? I don't get the point. So, but let's answer your question. You determine the point. You can say, for instance, if I do 25%, I want to sell. You can say that, right? It's your call. You can say if my stocks reach 25%, return on capital, I will sell. You can decide that. I don't think it's a good strategy for you. I think equities make more money for you when you allow them to compound, you reinvest the dividends because you are a long-term investor. That's what I think. But if you want to sell, there are many criteria for selling. You can say, okay, my return is X. Once it reaches X, I will get out. But the question now becomes, you get out and do what? Get out and buy what? That's the question now for you, right? If you had sold Nvidia at $100 and then buy what? Now you've lost. Nvidia was a good stock. You sold at $100. You made a lot of profit. Then buy what? What you would have bought today would be good as Nvidia. So that's what I would say. You can say 35. You can say 50. Whatever you put there, if that's your call, as long as that's your strategy, it's not a bad strategy. But I would say overall, for long term, if I'm an investor, why am I selling? If I buy a good company at a good price, if I buy Messi when Messi is 12 years old, why am I selling him? Why? I can eat the fruit of my labor by selling Messi to Chelsea. But why am I selling him? It doesn't make it. If I don't sell Messi, I won't die. So why am I selling him? He's a good guy. Why should I sell him? See the point I'm making?
Yes, I'm getting you, sir.
All right. Do you have a follow-up question, sir?
Okay, thank you, sir. Another question I want to ask is that the Nigeria stock market, like, what do you see in the future of Nigeria stock market? Because I see some people on Twitter, they are discussing about, like, the devaluation of Naira is going to affect the stock market. Like, we people putting our money in the stock market, like, in the long run, when we are selling our asset, like, the value would have been devalued. Like, there won't be really much profit, and the money won't really have good value before then. So what do you think about that, sir?
What does devaluation mean? What does devaluation mean? It means that the exchange rate...
The weakening of the currency.
I hear you. So if you devalue, it means that 1 naira will now sort of lose value to a dollar. So it affects the economy because when import dependent economy and all that. I hear you. Makes sense. I hear you. So what then do? You diversify, right? You can say I want to then buy dollar exposed equities or naira exposed currencies. You can build a portfolio that has both of them. That's the point I'm trying to get to. What you must do is to keep on investing. Why dollar investments are so popular in Nigeria today is because people feel the naira is going to be devalued. So you hedge. You hedge by using those apps to maybe expose yourself to dollar investments. That's what you want to do. You can say, okay, before I was doing 50-50, now do 70-30. That's what you can do. But the idea is always be diversified. Diversify away from one currency, one country, one commodity. Always stay diversified. So that answers your question. You don't have to stay in one place. You move around and you rotate your portfolio to fit the economic theme. That's how I'll put that. Remember, even with the diversification, the banks are still making a lot of money in Nigeria. I'm not seeing any bank, any US bank, or even the oil companies in Nigeria are doing better than the US oil companies. If you take the index, the oil company index in Nigeria in the NSE is almost 160%. I don't think the oil companies in America are doing the same. But I hear you. Overall, for the index for America coming to Nigeria, diversify, have a mixture, so that way you're not caught up in just one. That's how I put it for you. Thanks, Profitable.
Okay, thank you so much, sir.
Yeah. Okay. Olaleko Abiloro. Olaleko, how you doing? Olaleko is busy. Let me get Prince.
Good evening.
Yeah, Olaleko, how you doing?
Can you hear me?
I can hear you now, sir.
Yeah, I'm fine. Good evening. Mr. Kalu, thank you very much for having me. So, I've been calling you for a while, and also want to thank you for all you do. I just have a few questions. I'm a businessman based in Nigeria. I'm an entrepreneur, and I have a startup like I think 3 to 4 years business, and I function within the FMCG space. So I want to ask, due to the situation of things in Nigeria at the moment, we are having some challenges with funding. So I've been looking at options that are at my disposal as regards to funding. So I'm looking at either debt financing or some of my disposing of my assets for the funding. So I just want to ask which you would advise is the best option and is the best course for me that will not really jeopardize the business, being a startup. Then second question is regarding, I want to also ask if, because I know you've been talking more about the investment in the bond and the like. So I have more interest in the crypto trading. So I want to ask if it's also a good platform for investing right now.
Okay, yeah, two good questions, Olaika. Your first question is very, very easy to sort of respond to. So if you're a startup, or if you want to start a business, or if you are still in what we call the growth stage, you shouldn't take a bank loan. You shouldn't take a bank loan. A bank loan or any loan that you pay interest, doesn't have to be a bank loan, any loan that you pay interest on is only to be used for working capital, not to start a business, not to fund a business. Let me explain. So if your startup needs to buy maybe an oven or a new truck, you don't want to take a bank loan to do that. But let's say your company gets an order to supply X amount of goods to company Y, and company Y will pay you next month. So you need cash to do that supply, but they will pay you. Yes, you go to the bank, that's working capital. You borrow money from the bank, you fund the supply, you supply to company Y pays you, you pay back the bank. You don't want to use bank money apart from working capital. I would even say paying salaries, no. Why? Because if you start to pay, if you take a bank loan, you are working for the bank, and bank loans in Nigeria are very expensive now. They're more than 25%. You can't survive with that. So for a startup, I think I shared, if you look at, if you know how to search on Twitter, I've shared how to fund a business. I put various company growth stages, and I put the types of funding you need. If you can search on my Twitter feed, you'll see it there. If you're a startup, you're looking at family and friends, equity, and like you've said, selling down your assets to fund. You're looking for any sort of funding that does not involve interest. That's basically how you want to put it. If it means partnership, if it means give me money to invest in my business and I'll share profit with you, all that is perfectly fine. What you want to avoid is taking or paying interest. That one you should avoid. It's better you keep your company and cover it up till when interest rates go down, it remains your company, then you take a loan that the bank now owns your company. It's not worth it, right? So keep that in mind. It's family and friends, equity, maybe supplier finance, whatever financing you want to do, but not anything you're going to pay somebody fixed interest on. Don't do that, yeah? Cooperative, all those things are good because they are lower interest rates. So you can take loan from cooperative and all that, but not commercial bank loans, right? Okay, your second question on crypto. Crypto is fine. Like I said, no investment is good or bad. The question is how much? What's your objective? So what if your objective is how to build a portfolio? That's fine. You can do crypto, but I would not advise you do more than 10%. And I would say that any money you put on crypto should be money that you are prepared to lose because it's a very, very volatile investment. So if you know from the start that if I put money in crypto, I can lose it. How much can you lose? That's how much you should invest in crypto. If you think you can lose 10% of your income and be okay with it, sure, do 10%. If you think only 1%, sure, do 1%. It's not good or bad, but because it's risky, you want to do risk management and say, okay, how much do I think I can lose? And then you can get away from it. There are other ways you can do crypto apart from investing. There's staking. You can buy Bitcoin and you can stake it. I'm not sure if those things still pays out a lot of money, but that's how I would look at these things. For now, till the new admin in America comes in, we'll have a clearer sense of where crypto is going to go to and all that. But it's a risky portfolio, it's a risky investment. I don't recommend any investment. I recommend investing according to your objectives. That's the point I'm trying to make. So if you follow that rationale, you can't really go wrong with that. Yeah?
Yeah, thank you very much.
Okay, you're welcome, bro. Yeah. So I'm seeing on the comment section, people are saying I put Rise investment. Rise bought Shaka. So when you're doing Shaka, that is Rise. So Rise, I think, bought Shaka. So if you're doing Shaka, that's Rise Investments. And I'm also putting the apps. So people are saying AfriInvest, no, that's it. I'm only putting the apps that you can use to invest abroad. Your normal stockbroking firms all have SEC license. So your Meristems, your AfriInvest, your IBTC, your Arthur Stevens, all the stockbrokers, they all have license. So that's not what we're talking about, the apps, right? So they are all really, really good. Yeah, perfect. Prince G, what's up?
Good evening, Mr. Kanu. I just want to be brief. I have been listening to you or following for quite a while. I want to appreciate you for your analysis and how you've been giving some good practical financial tips. I really want to appreciate you. And lastly, I want to just ask from my booking little pocket mind if it will be helpful to grow somewhere. I'm a little bit blank. That's why I'm just asking. What can $1 million investment, or what can I put in $1 million investment into?
I can't answer that question. You're asking me to tell you where to invest. I can't answer that question. All I will tell you is that you need to go back to what I've said, right? What is your objective? Is it short term? Is it long term? Do you want to risk your capital? Are you doing appreciation of the capital? Or do you basically want to protect the capital? Do you need liquidity? All these questions, the answers you give will tell me where you can invest that $1 million. Like we did an exercise with a guy that just joined. How long do you want your money for? If you start to tell me my money next year, then we're not going to be talking about equities. We're going to talk only about fixed income, right? If you say, oh, this is money that I need for my retirement and this is in 10 years, we're talking about equities and all that kind of stuff. So because I don't know you, when I mean I don't know you, I haven't done a risk analysis, I haven't done an investment objective review on you, I can't tell you where to invest $1 million. What I can tell you is if you listen to this tape, last week's tape, pull up the tape that says how I can invest $1 million. That's our second most downloaded space ever. How can I invest $1 million? I shared on the Twitter handle yesterday. So if you go through yesterday until you find out Twitter handle, that Twitter post, if you listen to that space, you will hear a lot about how you should approach investing. You invest according to your objectives. If you need this money back in 1 year, you don't invest in certain investments, even though they're going to pay you more. That's the answer for you. So you want to invest according to your objectives, not according to the returns. So if it's paying you more returns, but it does not meet your objectives, you can't invest in it. Does that make sense? Okay, perfect. I got you. Let's get is it Moriah underscore Mbe?
Alright, I'm there.
Yeah, what's up, man?
Thank you for having me. Can you hear me?
Yeah, I can hear you faintly, but I can hear you. What's up?
Okay, I'm fine. I'm so much happy for having this space again. So my question is, if you raised about AI and about how AI is going to revolutionize, the entire financial sector. And for someone who, I'm kind of like an associate in the financial sector service, financial analyst, per se. So sometimes I'm really, really scared about, all these robo-analysts, robo-AI that is actually coming up. So I'm really scared about, the future of financial analysts and where it's going. So I just wanted a bit of, clarification about if it's actually worth pursuing or if it's, actually worth going into, considering I'm a young guy who really wants to go into, that occupation. If it's really worth going into.
So I talk about the analysts like the CFE, something like that?
Yeah, yes, exactly. Because I was also planning on writing the charter with financial analyst exam. That is the CFE.
Yeah, I would say you can't go wrong with that. Remember, what AI was going to give you, it's still a machine. Investors still want a human to hold their hand. Like when you call a company, you talk to the robot. If you want to talk to the robot, will be telling you, do this, do that, but you still want to talk to a human. So even though I know the AI or the robots can help me, there are lots of AI investment companies today that are just driven by AI alone. You don't talk to a human. But the market for a human advisor will never go away. And when you're talking about what's going to happen is that the CFAs, the CFPs are going to be the ones that would now rise in importance, not the quote-unquote everyday analyst. So if you are just a banker, if you are just a normal investment advisor, you are going to lose your job in the next 25 years because the AI and the computer will take over what you can do. But if you have a skill or a certification like CFA, CFP, CCP, ICANN, you are adding value, not just intelligence on how to pick stocks, but that human touch, emotional intelligence that you can explain to someone why they should sell their stocks and buy into those other stock, even though their wife or their son likes that stock. So that part of the market is not going to go away. And I would say a CFA is an international license for you. If you get a CFA today, you can work anywhere. So I would get it if you can get that, I would get it yesterday, right? I wouldn't worry about the machines coming through yet. I mean, that's a worldwide, it's in demand worldwide. So I would say don't worry about it for now. Anything that involves 1 + 1 = 2 is in trouble. But anything that involves describe why 2 is 1 + 1 is going to win. Does that make sense for you?
Okay, thank you very much. Yes, it does.
Okay, perfect. Perfect, man. Good luck, man. Good luck with that. Jamilu Hamza, how you doing, sir? Jamilu, what's up? Jamilu, can you hear me? All right, let's get Jamilu. Let's get Julian. Julian Olawole, what's up, man?
Hi, Carlo. Good evening, or good afternoon, good morning, wherever we are. It's good to hear your voice again. This is my third space. Yeah.
I remember, yeah.
Yeah, cool. Okay, first of all, I finally got the book I finally got your book in Nigeria. Boo. And I got it from Robin Heights, just as you said I would. So my question today is just, I remember the last space I was on, I heard someone speak about being able to open maybe stockbroking account in Canada so you could have direct access to the US market instead of going through trolls and trackers, which have a lot of fees in between. Do we have any information about how we could go about that and what we could do about that? That's my first question. And my second question, just bouncing off what the last person spoke about, how effective or how best can someone use all these fintech or AI-powered financial sites, something like FinChat AI? What would be the best advice you'd give? And my last question, I think I only have 3 questions. Can you recommend a financial advisor in Nigeria who could help with the financial terrain and has good knowledge about the space in Nigeria? Thank you.
So I have how best to use AI and fintech. I have recommend financial advisor. What's the first one again? It was the Canadian one. So the Canadian one, I mean, we shared the link. I haven't shared it's on. I forget the name. It's on the other space. I think I pulled it up when she was speaking at the last space. I think it's legit. I looked at them. They were licensed. If you can get registered with them, possibly. She said it's lower cost, but they do a lot of KYC on you. It's worth trying. I haven't tried them. All I said they were registered in Canada. So if someone can try them out, possibly, right? I'm not saying anything wrong in that. How's the best way to use this AI and FI? You know, I'm very jealous that in the year 2024 these things came out. When I said to invest, it wasn't even possible to use AI or your phone to buy Nigerian stocks. When I said to invest in Nigerian stocks, they were not online. It was all paper driven. When you buy a stock, you get the certificate. That's when I said to invest. But now, a kid sitting in Kwara State can go on his phone, put Naira on his phone, and buy Tesla stock. It's amazing. and the kids are complaining. The kids are complaining. So I think it's the best way to use them is to actually use them. I think there's a lot of issue about it costs a lot. Of course, it costs a lot because you are buying from Naira. If you have dollar, it doesn't cost anything because you are buying from dollar, right? But if you're buying from Naira, of course, it's going to cost you a lot. So, yeah, I think I lost the space here. Sorry, I think I lost. I think I got kicked out of my own space. I gotta mix someone of your joints. I just got.
Yeah, I just realized I wasn't hearing you long.
Yeah, Julian, you're gonna be a co-host. So sorry, but yeah, because I got kicked out. I just got back in here. All right. So essentially, right. So use it. If you're a guy in Nigeria, it's an option for you. So essentially, what you now have is that you have the opportunity to invest across the world. Take advantage of that opportunity. Don't complain and say it's expensive. It's expensive because it's in Naira. I get it. But what's the option? You invest only in Naira. Right now you have apps that allow you to buy any product. You can buy Tesla, Microsoft across the world. So yeah, I would say it's worth the cost. That's how I'll put it. Because if you look at the cost of your exchange rate compared to the cost of buying the shares is still cheaper. So I would say go for that. On recommending you a personal advisor, the problem is that we don't have CFPs in Nigeria. We don't have that sort of designation. We have stockbrokers, we have bankers. We don't have like you have in America where you can go and someone can do a plan for you. There are people that can do that plan for you, but they're like a banker or stockbroker. I don't know how much you want to spend on them. Money Africa, Sade, two of them, they do a pretty good job. If you go see them, I don't know what you want to do specifically. What do you want to do? Do you want to get a plan or you want to invest? What exactly are you trying to do in Nigeria with that guy?
No, I want to plan, of course. I am planning all through, so I want to start having a financial plan for the next 5 years to invest and grow my at least my assets and have some tangible assets I can hold for the future.
I think you can get that in America and just tell them the variables in Nigeria. They can do that plan for you because all they need, right, is your inflation rate, your expected, like your rate of growth of the currency, when you want to retire, things like that. But I think they will struggle a bit, but they will give you sort of like a framework, more or less, because they can tell you, okay, Nigeria is going to grow to 25%. So when you discount it, it's going to be a lot. Because the way these financial calculators work is that there's a discounting number, and I don't think those things are designed for Nigerian numbers. Because when I do discounting here, we're doing 5-4%. If you go tell them there that you have a risk rate in Nigeria is 29%. What that means is that when they want to invest for your pension, they have to discount by 25%, which means in 4 years they've discounted your principal. That's what it means.
That's true.
So
25% I get that.
Yeah. So, but then they have to also grow it. There's also the inflation side, but I don't know if their computers can work with that. But why don't you let me see what you want to do. DM me and then we'll take it from there. Yeah.
All right, that's cool. Thank you very much.
You're welcome. Yeah. All right. I got Ayakunle Adetula. Ayakunle, what's up?
Yeah. Good evening, Mr. Carlo.
How you doing?
Thank you very much for the knowledge you share on this platform. I mean, just to specifically say, I mean, that's one of those days you had a space like this. I mean, you talked about an investment platform that I just said, let me try it, and I made some good money, sir.
Good.
When people get stuff like that, you come back and say thank you.
So will you send? Are you gonna say thank you with mouth? You won't send me anything,
When I have the opportunity to specifically do that, I will do that. I know what I got. So yeah, definitely. I mean, it's not out of order to do that.
No worries.
Yeah. So I buy stocks with Bamboo and Trove. Both Nigerian stocks and US. But there's something that I saw with those two stocks. If you go there, you will find out that for these stocks of the same company, there are variables in their prices. It's not the same thing. And so I had specifically had some maybe market sensitive information, and I made some, I bought some stocks, and I then found out that on one of the platforms, the stocks moved. On the other platform, the thing was stagnant. It didn't move.
Interesting.
So I on the platform that moved, I actually sold off. I just kept it for like 1.5 months, and I got some good appreciation, and I sold it off.
So
But on the other platform,
you are saying that like the same stock, on one platform it had gone up in price, on another platform it was fixed in price. The price hadn't moved.
Yeah, it didn't move. And in fact, on one of the platforms, the movement was almost like 15%. And it didn't move on the second platform. In fact, I tweeted at them and I said, "Oh guys, what's happening here? These stocks moved on this other platform. Here it was just stagnant. It didn't move. Are you guys fixing the prices?
What did they say?
Is it not market reflective? You know."
What did they say?
I don't know if other people, they didn't respond.
Wow, you should have taken a screenshot and reported them to the Nigerian Stock Exchange. Just take a screenshot, because really, all they do is just like a television. Your TV does not generate images. It's relaying images from someone else, right? So imagine if my TV is showing me Arsenal, your TV is showing you Chelsea. It doesn't make any sense. It's from the same stadium, right? So you should have. I'm sure it was a technical glitch, which means that I could do an arbitrage. I could have bought and sold on between platforms and make a lot of money. It's not impossible. I don't doubt what you're saying. So I think you should have really taken a screenshot and held them to account, because that's what it means. I can buy on the one that didn't move and sell to the one that moved and make a lot of money. And that's the problem. So yeah, that's very unfortunate. Yeah.
Okay, so I saw it, and it was a bit concerning, because on the platform that didn't move, I bought almost like times 5.
Yeah.
And the platform that moved, I bought like 20% on the platform that moved. I bought like times 5 on the platform that didn't move. So I was actually paid.
You are the one that, like I said, you took advantage of it. It's their loss, because essentially what's going to happen when they place your order in the stock market, they are going to pay the real price. So you made money off them. Yeah, because when they go to buy, they're going to pay, and I'm surprised they didn't come back to you, because that shows poor risk management on their part. Because when they trade, they will see the difference, because they have offered. You just made an arbitrage of them.
Yeah, something like that. I know that as people have been having this conversation, nobody has faced that. And usually what I do is I usually buy almost the same stocks on those two different platforms.
Yeah, gotcha.
Almost similar stocks, but most times I have stocks on both platforms from the same company.
That's crazy.
So sometimes I can decide to just
that's why we do all this.
Once I experience it again, I will
take a screenshot.
I would
that's crazy.
I will jump back to the other thing.
Yeah, that shouldn't happen. Take a screenshot. Yeah, sorry about that. Okay, guys, we'll be here for about 2 hours, 30 minutes. We're doing our end of year review. I've shared the checklist with you guys on what you want to get done. Investing is not just Naira and Kobo, it's also making sure you dot your I's and your T's, your next of kins, your estate plans, and all that. So I'll make sure you guys do that. Don't look at investing Naira and Kobo. Make sure you also clean out. You have your schedules. You've gone to your brokers. You've got your dividends for the year. Get all that done this year. So next year, you have clean books. You are starting off fresh and all that, right? Jamilu, hi, how you doing? Jamilu Hamza, what's up? Jamilu called you twice now. So let's go to OK Adewale. OK Adewale, investor, finance. Too much knowledge ain't nearly enough for me. Okay, what's in mind? But let me ask you a few questions here on the timeline. Someone is asking about if I use international stocks to trade internationally, will I get a CSCS number? So let me explain that. We explained this last week. Sorry. When you want to buy stocks in Nigeria, you can buy stocks without the CSCS, right? But the CSCS is where you want to settle. You want to take your stocks to and settle. CSCS is like your post office box. You buy stocks, then you can put it to your CSCS. If you use those trading apps, they have their own CSCS that they can use to buy and sell for you. The reason why they open up their own is that when you want to buy and sell, they can buy and sell from their box to the next person. So it's easier for you, right? But if you do yours, you have to take it from your CSCS, give it to them to buy and sell. So it's your call. You can use theirs or you can keep yours in. I'm just seeing that President Jimmy Carter has just passed away at the age of 100. Rest in peace, sir. Okay, Adewale. Yeah, go ahead.
Hi, good evening. Can you hear me?
I can hear you, sir, yeah.
Yeah, good evening, sir. Thanks for the knowledge, yeah. I just need a kind of clarification.
Yeah.
I'm someone that likes to buy US stocks. So, and I'm for a long time, maybe 15 years at minimum. So, presently, I've been trying to consult everywhere to have, if there is a way somebody can be in Nigeria and have a broker in US because of Nigerian situation. You know, when you're thinking long, you have to put some things into consideration. You know, because sometimes you can be skeptical about Nigerian financial, whatever here in Nigeria. To me, I don't put too much trust in them. So when you're looking at long term, many things can happen, talking about 15, 20 years time. So imagine a situation whereby you're planning to do a stock, build your stock, and it's costing you like $1 million maybe after 15 or 20 years. So those are the things I'm putting in place in case to fight the future problem of bottleneck. So I want to ask if there is any way someone can get a US broker, because to me, I believe there is a discipline, there is integrity in those areas. So this is what I'm looking at. Is there any way someone can get a broker from US and you start trading from Nigeria here?
No, I think it's two ways. It depends if you have a social security number. If you have a social security number, yes, you can get a US broker. If you don't have a social security number, you have to use those apps because those apps are using a broker in the US. That's basically what they are doing. So it's down to basically how you are registered, more or less. If you don't have a social, you can. If you are from the UK and the US, the same thing.
I'm in Nigeria. I'm presently trading with the normal fintech Nigerian
so you can only do the bamboos, the shakas, and the cowrie wise. Yes, that's what you can.
What I'm looking at, the amount I'm looking at in the nearest future is what no Nigerian situation. I just said something like if you're looking like $1 million in the next 15 years.
I've answered, right? You can't use a broker because you have a social. You can ask your Nigerian fintech app to open up a CS for you in America. You can still do that one. But remember, when they do that for you, if you want to sell that share, you have to go and look for someone that will take it from your account, put it in their account, and sell it. So it's more, if you need money tomorrow, you can't get it tomorrow because you have to first of all transfer it to a broker, and because it's a small amount, they might not be able to answer you. But without a social, you can't have an account in your name.
No, I'm not talking about small amount. I'm talking about in $1 million. I'm not talking about.
It doesn't matter how much. If you don't have a social, you can't open up a stockbroking account in your name in the US. Yes, sir.
Okay, thank you.
You're very welcome, sir. All right, let's get one for Igbo.
Hello, good day, everyone. Good evening.
Good evening, sir.
Hello.
Yeah.
So please, I want to ask, is there any app for day trading in Nigeria for US stocks? I know about Bamboo Box.
No, you can't do day trading. They won't let you do it because day trading you need to be accredited or something like that. So it's really hard for you to do day trading. Even if you can, the volume, your internet speed here may not allow you. So because you are trading in milliseconds and lots of currencies and lots of volume, so I don't think so. Yeah.
Okay. Thank you.
Hey, you're very welcome, brother. Yeah, thanks. Cybermed, Elekwachiso.
Hi, good evening, everyone. Good evening, sir.
Hey, how you doing?
Good morning, good afternoon. Yeah, so my name is Chisom, and I'm a recent graduate, right? And I'm currently a radiography intern. So I kind of like have salary coming in for now for like a specified period of time. Okay, so I have a few questions as regarding the stock market, both the US stock market and the Nigerian stock market. Okay, so yes, I'm doing well, thank you. I didn't get that part. So then the first question is, say you maybe get salary 300k, 200k, whatever, and the proportion, okay, I'm going to take 20% and invest it in the stock market, for example. So, for example, say you have 50k, I know 50k is small, but then say you have like 50k, right, for your whole investment at all, like in the stock market. How would you split it into the US stocks and into Nigerian stocks? That's one. Now, concerning the US stock market, right? Now, knowing that we have ETFs, we have growth funds or growth stocks.
I lost you there. Julian, can you hear her?
No, I think she's off too.
Okay. Cybermed, we can't hear you. We'll give it a few seconds. If it doesn't come, then we'll just answer the question she asked because I can't hear her. Cybermed, if you can hear me, I can hear you. You might want to drop off and hop back in again. Okay. Let me get Jamilu. Cybermed. Cyber, we couldn't hear you. You dropped off. Is it possible I got the first question. Can you ask the second question again?
Oh, okay. I'm not audible. Can you hear me?
I can. The second question I didn't hear at all. Can you ask it again? The second question?
Sorry, am I audible now?
Yes, you are. Yeah, I can hear you. I'm saying your second question. Can you ask again? Okay. Can you hear me, Cyber? Hello?
I think she has dropped off again.
Yeah, so I won't answer till I know she can hear me, so that way she can hear her answer. Let me try to get Ogbonnaya. Are you able to speak? Well, we got about 15 minutes more, or we shut down before then. I want to make sure she hears the answer. Ogbonnaya, are you ready to speak, sir? Ogbonnaya going once. He's here, but doesn't want to speak. I'll drop him so that way we don't wait for him. Perfect. Cyber is requesting to speak again. I have added you back. Cyber, can you hear me? She's back on as I speak. I'm not sure she can hear me. Can you hear me, ma'am? Can you hear me? Okay. Let's move on. Let me see. All right, so good time to look at the So I was explaining about the CSCS. If you get a CSCS in America, you can do that, but you make it more difficult to sell instantly or otherwise. Also the same with Nigeria. If you get your own CSCS, it's safer. You keep all your stocks here, but it also makes it difficult for you to sell or with ease or with efficiency if you use theirs. Let's see. Most of it, someone's asking, can you talk about the gold market? Yeah, if you can be a bit more, if you can clarify what you mean by gold market. Are you talking about buying gold itself as a security, as an actual gold bars, or buying gold certificates? There are many ways you can invest in gold, but gold itself as an investment is seen as a hedge, which means it won't pay you any returns. It's just a hedge against falling asset prices. And gold has been going up in price of recent because the Chinese and the Russians are buying a lot of gold because of the sanctions against them. So I'm not sure if they've stopped buying, but gold seems to be that investment where you want to buy or have a little bit off in your portfolio and all that. It doesn't pay you anything. So it's like a defense against inflation. Keep that in mind. It's not going to pay you any dividends. So keep that in mind. Cyber, you asked a great question. I really wanted to answer it. I'm not sure if you can hear me.
Yes, I can hear you now. I'm sorry, my network got messing.
Not a problem. I got the first question. What's the second question? Or you just go ahead.
Okay, the second question is, they say you already have you splitted the money into for the US stock market and for the Nigerian stock market, and then the US stock market, according to my little knowledge, is more diverse, right? You have ETFs, growth stocks, and dividend stocks, and the rest of all those. What percentage of the money would you put into these different sectors or these different stocks, right? And what range of ETFs would you look at first for someone in their 20s? Yes.
Okay, let's use you as a case study if you don't mind, right? So
yeah, sure.
So the question is, you have about 300K. You want to invest 20%.
I have like 50K, for example.
As in 1, 2, 3, 4, 5. Okay, 50K naira, right?
Yeah.
That's the total amount you want to invest, correct?
Yeah.
Okay, and then you want to do 20%. No, 50K is the market. 50K is what we're investing, right? You want to do a split, and you are about 20 something years, right? So obviously we're looking at a long term. Do you need liquidity anytime soon?
No. I'm thinking 10, 5, 10, 20. I don't know how long, but I'm not in a hurry.
I got you. So, I mean, if I was 20 years old or 25 years old and I had to invest 50K, I would just buy the cheapest investment that allows me to diversify, both for Nigeria, both for the US. The cheapest equity investment that allows me to diversify. Because you said you have a long-term horizon. You said you are okay, we don't need liquidity. What about your view on risk? If the market crashes in 2 years' time, do you want your money back, or can you wait for the next 8 years to get your money back?
Okay, so that's something similar I was going to later. In my third year, that's 2022, I bought Tesla. Then at 330 something. I didn't do my proper research though. And around August, there was a stock split, 3:1, and Tesla fell to as low as 109. Okay, this month is the first time that the fraction of shares I bought has added $1.08. So I'm really not bothered because my emotions are already shattered. My emotions have been shattered already. So I want to even get into maybe like automatic saving or automatic investing. So in things like this, when the market goes down or very high, without emotions attached, I can still make profits. Yeah.
Okay, what would you say if I told you that when the stock for Tesla was split, the share price didn't actually go down because they gave you more shares, so it just adjusted the stock price down? Would that make you feel better?
A little bit.
Yeah, because you got more shares. When they do a stock split, right? If you have a share that is still worth 10 naira and it's trading for 10 naira, so you have a stock price like trading for 10 naira and you have one share. If I do a 1-for-1 split, right, I give you another share. So you now have 2 shares, but the stock price can't be 10 naira. The stock price will become 5 naira. So you now have 2 shares worth 5 naira each, making the same 10 naira. Does that make sense? So when Tesla split their shares, you didn't lose money per se, because when they reduced when they touched their capitalization, that's why the share price came down. It's not like it lost because of the market movement. Just want to make that point to you, right? So let's come back to your case study, right? So I have a long-term horizon. My risk appetite allows me to take hits on my principal because my principal will recover, and I don't need liquidity. I would go into the equities market, right? I would try to get the cheapest way I can diversify in the equity market, say the US and Nigeria. The only way I can do this is to buy either a mutual fund or an ETF or an index fund. So I'm buying a mutual fund or an ETF that invests in the index, right? The index is already there. I just want to buy that index. Either I do it through a mutual fund or through an ETF. I can use an ETF, for instance, an exchange traded fund. So I can buy, for instance, in America, like I said, if I do the VTI, right, that buys me 4,500 or so shares in the US market. I'm exposed to 4,500 shares in the US market just by just buying the VTI ETF. Why am I choosing VTI? It's from Vanguard. They are very big, so their cost per purchase is very, very low. Let me actually give you the cost. I think I pulled up VTI a few minutes ago. If I look at VTI, let me see if I can I can Google VTI. If you do the same thing, if you put VTI on Google, it would show you the VTI stock index. So I'm looking for the cost per share, right? On what I want to buy. Wait, dividend yield, this will give me a lot. I'll get it if I don't want to keep it here. So if I buy VTI, right, I'm able to get US exposure. What about Nigeria? For Nigeria, we also have, so I have VTI here. The expense ratio for VTI is 0.03. That means they only take $3 for every $100 that I buy. That's very, very cheap. Only $3 for every $100 that I buy. Or the Nigerian guys would add their own, but that's good for you, right? For that, so I would do, if I was now in Nigeria now, right, I would do more than 60% in US VTI. I would do maybe 60 or 70% US, maybe, because I want to get exposure. I don't want to risk my Naira. How would I invest the Naira portion? This is now a bit different. Nigeria has got ETFs, but I might not buy the ETF directly in Nigeria. I might buy the mutual fund. So they have the mutual funds in Nigeria that buy equities. So there's IBTC, there's AfriInvest, there's Meristem. I want to buy one of those stockbroking firms that have those equity unit trust. Nigeria will call them unit trust. America will call them mutual funds. I want to get exposure to those guys. So I buy the Nigerian mutual fund. America, I buy the ETF that both invest in equities. I want to buy them. The one in America, I want to reinvest my dividends 100%. So I tend to do what's called a DRIP, DRIP, dividend reinvestment plan. So every dividend I make, just put it back into the investment and buy me more shares. Same with Nigerian firms. Nigerian firms don't have a DRIP, so you have to do it manually. When they give you your shares, you take it back to them and you just buy more shares. If I have this sort of investment, right, it's a very, very high risk investment. I can lose all my money because it's 100% in equities, but it's exposing me to the largest, most liquid market in the world, the US market. So I have a Nigerian and I have a US. I will do 70-30. That's how I think I will split it, or even 80-20. I will reinvest my dividends and I'll forget about it for the next 10 years. And I'll see what happens.
Okay, so nothing on single stocks, Apple, Tesla, Coca-Cola, nothing.
No, because you have 50K. What's 50K in dollars? If I do, let's do it. If I do 50,000 divided by, let's do 1,600 in dollars. That's $31. You can't buy Tesla with $31, but you can buy an ETF that buys Tesla with $25. You see where I'm going to? You can't afford to buy the individual stock. So you want to buy you don't want to wait, you want to buy the ETFs. You see, your greatest weapon is time. You are younger. So every time you compound, you are making more money than me. I'm already older. So even if I buy the same stocks you're going to buy, you have more compounding periods than I do. Markets are going to go up, they're going to come down. But over the long term, they're going to go up. If you pull the US market from 1800 to today, you see it going up, down, up, down, up, down, but the trend line is up. So you want to be in that market as a younger person. You want to buy and invest your dividend and just leave it there, right? I'm going to share the VTI stock chart, like the how it's gone up in price, just so you can take a look at it, right? Performance and fees. Let me look at this. If you bought VTI, right? This same VTI.
Yeah, I'm looking at it right now.
Yeah, from inception, 9%. This stock started April 2001. You would have made 9%, but 9% is in US dollars. So you are beating inflation. 10 years is 12%. 5 years is 15%. This year alone is 27%. And that's you put in your $31, they're going to get 27%. US inflation is 2-3%. So you're making a real rate of return. So that's how you want to do it. You want to do a lot of equities when you are younger. As you get older, you want to then transit towards more fixed income. But you have tons of years ahead of you. You want to do this, forget about it.
Okay, so would you advise I buy an ETF, the VTI ETF currently, or maybe watch the market till it goes a bit down? Because currently it's on like 294.
Why are you watching the market, girl? Why are you watching which market? I watch you buy. You know, there is no you don't time the market. You want to be the time in the market is more important than timing the market. You can just buy it. So if you decide that you're going to be exposed to the market, do what's called dollar cost averaging. So every month you do something in. So you ignore the price. You want to buy a good stock at a good price. If you can't do that, just do a dollar cost averaging and you keep on buying. If it goes up, that's fine. If it goes down, that's fine. But if you want to wait and say, I'm going to wait for the stock to go up, if you Google, you see lots of articles on Twitter that will tell you if you missed the best 5 days in the market, your return will crash. If you Google it, you'll see a lot of articles telling you if you were invested for every single day in the market, but you missed maybe just the top 5 best days in the market, you lose a lot of money. Why are they giving you? Because you want to be invested. You don't want to do that. I want to buy when so you buy today, you ignore the price. You are young. You keep on buying. If this is your objective, you keep on buying. You keep on investing. You keep on rebalancing. Right now, you're 100% in equities. I know what you're rebalancing, but that's what I would do if I was you. It's not advice. I'm just telling you how I would approach it.
Okay. Okay. Thank you so much. One more thing. So, say as regards to the dollar cost averaging that you spoke about. So, say I do the 70, 30, or 80-20, like you said, to split between both markets, and I want to keep reinvesting monthly. So I keep putting that same amount every month, maybe like automatic investing or something every month.
Correct.
For the next how long?
For as long as you can afford it. So you have to go back to your budget. So when you do your budget, you have to say, I want to allocate this amount for investments. So if in this year you allocated 10% for investment, then that's what's going to go into it, right? So it's going to be based on what you budget. If someone just snatches you money tomorrow, okay, that's money that you didn't plan for. You can also put it in there as additional voluntary contributions in. But as long as you keep on doing, when you get a paycheck, you do an auto transfer. You don't even see the money. 10% of your paycheck just goes automatically to your investment account. Then from your investment account, you then take that money and you do your 70-80. Do that as long as you earn the money. As your income goes up, you can increase the percentage or you can budget. That's why percentages are good. If you go to my website, go to www.carloaja.org. You see the financial calculator there, right? So you can plug in all your expenses. At the very bottom, when you do the expenses, it will tell you, give us a percentage for investment. You can put 10% there. It will calculate everything for you. If you put your income, passive, blah, blah, to do all that for you, put your percentage you want there to calculate it for you, tell you how much you want to save every month or every per annum. If you have a problem, DM me. Yeah?
Okay, sir.
That works?
Okay. So, yes, my very last question, I'm so sorry. I'm just being inquisitive at the moment. So say for example, maybe I want to look, this is just extra. I want to look at stocks personally, individually. What are the things you as a person, what are things you look out for? Say, okay, I'm looking at, let's say, First Solar or Open Door or Acha or any of these very random stocks. What are the things you look out for before you say, okay, this stock has longevity and would be something in the future, per se? And also, do you look at the price per earning ratio? Do you use a determining factor for you?
Yeah, good question. You're asking a good question. So again, when you look at a stock, right, your first question is, will it earn money tomorrow? That's your question. Will it earn? So how do you know if a stock will earn money tomorrow? Market share, right? He that has market share will win. So before you even go to the numbers, look at the market share in that sector. If it's a growing market share or it's a stable market share, and the products also have a stable market share, then you say, okay, that means in this tight market, this company has the means to hold its own, to sell its products, and to make an earnings growth. You are looking at future earnings.
It can get lonely climbing Mount McKinley, so to entertain myself, I go to ChumbaCasino.com. At Chumba Casino, I can play hundreds of online casino-style games for free, like online slots, bingo, Slingo, and more. Plus, I get a daily login bonus. It's just too bad that up here, I don't have anyone to share my excitement with. Woohoo!
Live the Chumba life. Anytime, anywhere. Play for free now at ChumbaCasino.com. VGW Group. No purchase necessary. Void where prohibited by law. See terms and conditions. 18+.